Thank you everyone for joining in. My name is Jocelyn Henao Estrella, and I'm the Executive Director of Neighborhood Housing Services. It is a pleasure to be with you today from my home to yours, from our family at NHS to your family. This is a great opportunity at our Housing Expo to provide information about how we can maintain, how we can buy, what are our rights, and also how do we are able to, what is the process of buying a home, especially given the time that we are in. We have we have great experts today that are going to join us this afternoon from the real estate industry, as well as our experts of the organization. NHS of Queens, we have been in the community for 25 years, and we have a history as a HUD certified housing counseling agencies of providing the tools so our low to moderate income Queens residents are able to buy, keep, and maintain their homes. We have different programs from first-time home buyer, a program, it's from the education to the one-on-one, to not only do we want people to be able to buy, but we want people to maintain their homes. And from homeowners, we have different programs from rehab, from programs for foreclosure prevention, financial empowerment, as well as for renters. We have counseling also on how to apply for affordable housing. So we want to be able to have, as a community, not only empower our neighbors, but stabilize our community. We know that from homeownership, that it has been the homeownership, it is the bedrock of the American dream, and is also the bedrock for creating wealth, especially for Brown and Black communities. For example, in the Latino community, 63% of the wealth come from homeownership. 59% of the wealth in the African American community come from homeownership. Therefore, we want to make sure that as in a high cost area like New York City, that we are able to provide the tools to our low income neighbors to be able to have opportunities for this American dream. So today, you have opportunity to listen, also ask questions, and also we would like to continue this conversation, not only for today, but also for later on, so we can assist you in that process. So thank you for trusting our services. Thank you for trusting our, and taking time out of your day to be here in our virtual Housing Expo. Usually we hold our Housing Expo in the Queens Museum, but under the circumstances, our team decided to have continue providing these great resources, but do it virtually. All of us in New York City, we have been affected by COVID-19, but also as New Yorkers, we are resilient, and we are not about to cancel our event. We are not about to cancel our aspirations and our dreams, and we are resilient, and we are going to continue as a community to rebuild and continue to work on our dreams and making it reality. Yes, it may be difficult. Yes, the road may be hard, but we know that when there's a will, there's a way. So it is our hope that through this opportunity and through these resources, that you have opportunity to ask questions, and also that along the way you are not alone. You have a team. You have us at NHS that we are able to, and we are more than willing to assist you. So today, I don't want to take further more time, because we have many speakers that want to be able to assist you and provide and share their knowledge. But beforehand, I want to thank the team, our team of NHS of Queens. We often call ourselves the tiny but mighty team. We have we have from counselors to our program assistants to our folks in that help us with the community outreach. It is a tremendous team. I cannot do it by myself, and I want to thank them for taking the helm and for really taking the helm of creating this Housing Expo. And I want to thank each and every one from Alex to David to Joelle, and especially Donium, for Raisa, Miriam, Josephine, also our esteemed Christine. I want to thank all of you for helping us out and also for sharing everything with our clients. So without further ado, I want to once again welcome you to our Housing Expo, and I hope that it's going to be a very a great day today. So thank you. And now I want to be able to introduce our great coordinator, Donium Reed Harris, who is going to lead us in the next section of the Housing Expo, which is the home purchase seminar. So thank you, Donium, for all you have done, and also I can't wait to hear more about it. So thank you.
Thank you, Jocelyn. Hi, guys. Thank you for coming to our virtual Home Expo 2020. Hope everyone is doing well and they're safe and at home, or wherever you are in your respective places. I hope everyone is good and well. Well, we want to get right into it today. As you can see, our agenda that's listed, we're going to start with the home purchasing first, and we're going to go on to the other items afterward: the tenant and affordable housing, our homeowners services and rehab, job opportunities, and then we'll close out right before 6 o'clock, okay? So, number one, the first thing we want to do is I would like my wonderful panelists to introduce themselves to us, starting with my first person that I can see. Obviously, we know our staff. Well, Jocelyn has thanked them so well. So I want to thank everybody and all our team at NHS of Queens. But I want to introduce first, the first person I can see is Darren English. So Darren, just introduce yourself. Tell them a little bit about who you are and who you work for.
Thank you, Danielle. Hi, my name is Darren English. I am a Community Development Loan Officer with Quantic Bank. Quantic is a CDFI lender headquartered out of Rockefeller Center, which means that we are a community development financial institution. We've been working with NHS of Queens for many years. Our mainstay is providing first-time homebuyer financing and grants to their clients. So I look forward to speaking with you all in the near future.
Thank you so much, Darren. The next person on my view is Mrs. Yvette Monteith. Hi, Yvette.
Hi, Julio. Hello, everyone, and I hope everyone is healthy and staying safe. My name is Yvette Monteith, and I'm producing sales manager with HSBC Bank. I've been in the business for over 25 years, and my desire is basically helping first-time home buyers to achieve their dream of home ownership. So those are the clientele that I work with. I've had an amazing relationship with NHS of Queens, helping to assist their borrowers in their needs.
Thank you so much, Yvette. And Mr. Ward, how you doing today?
I'm good, thank you. Yourself?
Good, good. Could you introduce yourself to everyone?
Sure. I am Samuel Ward. I'm working with Wells Fargo. But before I worked for Wells Fargo, I worked for NHS, one of the nonprofits, the same NHS you're working for 5 years. So I'm kind of perfectly aligned with the grants and programs that the NHS offers. And I'm happy to be continuously working with you guys.
Great, Sam. And Ms. Munoz, we need you. How are you, Ms. Munoz? Thank you. So happy that you made it today. Please introduce yourself, Delphia.
Hi, good afternoon, everyone. Thank you so much for being here. Thank you for letting me be here as well. I'm Delphia Munoz, and I'm with the State of New York Mortgage Agency, Sony May. So Sony May's mission is to provide safe, affordable, and sustainable home ownership. We look forward to We've always worked with NHS of Queens. They're a great partner. They're a great resource. And we really look forward to being able to help all of you achieve your dream of becoming a homeowner.
Thank you, Delphia. And Mr. Dwayne Wright, how you doing today?
Good, thanks. How's everybody doing today? Okay, so Dwayne Wright here from M&T Bank. I have been in the business for 15 years with M&T for going on 7 years. I've been working with NHS for many years at M&T as well as other places, and I'm looking forward to service you all and provide you with great information about the home buying process.
Great, great, great. Oh, please, my esteemed Mrs. Deborah Johnson, we're so happy to have you join us. I know you would have some difficulty getting in, but you're here. That's a blessing.
It is. It's a blessing
Yes.
to be here and with all these folks around the table. So my name is Deborah Johnson, and I'm the Community Reinvestment and Community Partnership Manager. And I have been in the business for over 40 years. So I recognize the value of a partnership like NHS of Queens. Was pleasantly welcoming the words that the esteemed Jocelyn provided to the community. So, you know, the reason why I feel so strongly about the efforts of NHS is because we recognize that the benefits of homeownership outside of building wealth connects families to their communities, and it leads to a greater civic engagement and better health outcomes. So, you know, the work that NHS does, as you can see, the partners around this table, we applaud that work and applaud you for bringing us together today.
Thank you so much, Deborah. And Mr. Peter Carlin, we're so happy to have you with us. So please introduce yourself, Peter, and tell us where you're from, please.
Thank you. Thank you so much. Thank you for having me, you and Jocelyn and NHS of Queens. I'm the new kid on the block. I feel like I'm the new kid on the block. But I'm really excited and happy to be here and connected with you and NHS of Queens. I'm been in the mortgage business since 2013. Before that, I was worked on Wall Street. I had a little stint in an acting career in Los Angeles, and then got into mortgages in 2013, and just really love combining, you know, financial services with home buyers, you know, first-time home buyers, and helping first-time home buyers get into their new home and achieving their dream, you know, achieving the dream, as the Sony May program has that program. So thank you so much for having me be here, and I feel honored to be part of this esteemed panel. I appreciate it. Thank you for having me.
Miss Beige, I know you're on that line. We can't see your face, but we know that you're there. My wonderful Miss Michelle Beige, please introduce yourself and let us know how you're doing.
Good afternoon, everyone. And I too share a lot of the same sentiment that our panelists have shared. I am with Bank of America, and I've been in the mortgage industry for about 30 years. And I started when I was like 5, so that's my story, and I'm sticking to it. But that being said, I've been in a myriad of different aspects of mortgage lending, more specifically in the CRA realm. So I'm a community lending specialist, and my primary responsibility is to assist first-time home buyers with purchasing their homes. And we are committed at Bank of America to help our clients thrive through home ownership, with our commitment of bringing people together with our products and resources that can help first-time home buyers buy homes of their own. So I'm very excited, honored, privileged to be a part of this panel to share any information that I can share with regards to Bank of America's products and programs.
Thank you so much, Michelle. So my name is Danielle Reed Harris. We're going to jump in a minute right into the actual process. But I'm Danielle Harris. I've been with NHS of Queens for 12 years. Been in the business for 25. I am the program coordinator for home ownership and financial capabilities. And I love what I do, and I look forward to helping as many of you get into your properties as possible with a seamless transition. That's why we have the team here today, and making sure that we can apply for grants for you and try and get you some additional assistance while buying your first home. Okay, so we have at NHS of Queens a pre-purchase counseling process. That means you would sit down and meet with me. We would do a one-on-one servicing. We would sit down with you and go over all your documentation. You have to have home buyers education in order to purchase your home and receive a grant. Home buyers education, I think, should be mandated across the board just in general when buying a home, so that way you're not being taken advantage of. It's extremely important for you to go into this process and be educated and know what it is to buy a home. That way you can know each step and you're not feeling like you're forgetting something or you don't know what's going on in the process. Knowledge is power. We provide a pre-qualification just to get you processed, so that way you know what you can qualify for. You're not going into the market buying something that you cannot afford, and you'll have an idea of what a monthly payment looks like and what your escrows would be set up to. And we'll talk more about that later. The pre-approval process would come from the lenders that is on your panel here. They actually will issue a pre-approval, and we assist them with that, so that way we make sure that all the information is over to them in a proper fashion. We also host seminars, which is like the expo that we're doing right now with you guys. We have classes. We also do mortgage assistance, which you'll see a little bit later. Riza will talk about that. We have the down payment and closing costs programs that we do the grants with. Closing costs are sometimes funded through grants as well as down payment. So that is part of that process as well. Financial capabilities is way above that. Everyone knows they need to be financially capable to buy a home. So we do have those services, and those services are free at this time. So if you know you need some help to get your credit back on track, please take advantage of those services. Our coordinator, Mr. Joel Santos, does that along with myself, and we'll help you get back on track financially. The next portion, Alex. Then next portion is we assist with refinancing as well. We'll take a look at your documentation to see if you have a possible opportunity to refinance in this market. You know, the rates are the best they've ever been. So we will assist you through choosing the proper lender to make sure that they're going to meet your needs. We have home improvement loans that we will assist you through the financing with that as well with the lender. We do home maintenance training, one of the best classes we've ever had, and as well as the foreclosure intervention services. So we can make sure that through this hardship that we're all going through, I call it our new normal, no one loses their home. And that's what we do in our home ownership services department, okay? So home buying education, and this goes across the board. This is for every lender that's on here. They all require 8 to 10 hour education class from a client. Very important. You must take a class. Now, we know that we're in a situation where a lot of us aren't doing things in person and we're doing them virtually. So you can actually take the class online at homeamerica.org. The cost is $99, and you would choose NHS of Queens, or we will not know that you've taken the class. So that's very important that you choose NHS of Queens. It prompts me to let me know that you've taken the class, and I'll make sure that yourself and your lender that you're working with receives a certificate so you can apply for those grants. It doesn't matter what grant you're applying for in New York State, you must have home buying education. The curriculum will cover Are You Ready to Buy, Budget and Credit, Shopping for a Home, Getting a Mortgage, and Protecting Your Investment. All of those areas are extremely important, and they're all modules and part of the actual educational process. The one-on-one services that I do and I sit down and go over with you is $75. And what that would cover is that we'll go over everything from A to Z, all your documentation. We'll find out if you qualify to buy for the first time. We'll look at the credit, we'll break everything down, and then we'll talk about what the next steps are for you. When classes open back up and we're in a safe space, the in-person classes are $125 in person, and that along comes with a very large book. And we go over and it has modules, and it's a good tool for you to have when we do the classes in person for you to read through as we're going through the agenda. And the checklist of documents required are basically standard. Your tax returns are due for the first 2 years, which is 2018, 2019. Your W-2s for the past 2 years are required. They're also required for your grants as you apply for them as well, guys. You need to make sure that you have all documents in place so that way you can qualify for your mortgages as well as your grants. And all the lenders are going to need these documents from you. Okay, if you're self-employed, you're going to need your profit and loss and your statement balance sheet, and your accountant can prepare that for you. You'll need 2 complete consecutive pay stubs, and that'll be for 2 months. You'll also need your award letters if you are currently receiving Social Security, pension, child support, or anything of that nature. Your driver's license or a valid government issued ID is required. And for your assets, let's talk assets. Everyone thinks when they go into the process, they don't need to have money. With that being said, you can come in to learn how to build wealth, but you need to make sure that you are thinking about buying a home for the first time. You need to have some money to put down. That's your earnest money. So you will need to have some assets. You'll need 3 months of proof. That's your bank statements. And 3 months of your most recent money market annuity or IRA accounts, even your 401ks, your TIAAs for my teachers, or any of the investments that you have that you know that you can liquidate to purchase for the first time. Judgments and any liens filed against you in the last 10 years must be satisfied, okay? So that's the requirements for that. I'm not going to do the slide, Alex, for the grant yet. I want to have Sophia jump in for hers. And then I want to get to asking questions once Delphia wraps with hers, because I'm sure that the panelists here would like to know some things from our lenders. Delphia, please take it away.
Virtual.
Delphia, can you hear us? You're on mute. There you go.
Okay. I had to unmute myself. I listened when you said to mute myself, so I did.
No problem.
So again, good afternoon, everyone. Again, I'm Delphia from Sony May. So the question, of course, for many people on today, and first of all, let me just say that I congratulate all of you for taking these first steps necessary to actually be able to achieve your dream of homeownership. So you really need to be congratulated, and I applaud all of you for taking time and being here today. So if you're looking to buy your first home, just to let you know, Sony May provides some down payment assistance. We call it a DPOW. We have below market interest rates, home renovation financing, some special veterans programs for 1 to 4 family homes, including co-ops and condos. Next. So again, Sony May was created since 1970, and we really, we came about to try and alleviate some of the shortage of funds available at the particular time for private banking system. I think you're going a little faster. So as I mentioned before, our mission is to provide safe, affordable, and sustainable home ownership, right? Because everyone wants to be able to own that home, but you should do it in a safe manner, right? And going through agencies such as NHS of Queens really helps you to know that you're doing it in a safe manner. To be able to have affordable mortgage, something that you're going to be able to really live with and be able to pay, and of course to be able to sustain that mortgage, to keep it. Because one thing is being able to get it, and another thing is to be able to keep it. Nobody ever wants to lose their home afterwards. So it's our programs are available to low to moderate income households in New York State, so anywhere in New York, and with a focus primarily to first-time home buyers. So our programs are really available through a network of participating lenders, and many of the lenders that are on today are participating lenders with Sony May. And you can always find out who's a participating lender by going to our website, which is sonymay.org. Next. So Sony May provides various mortgage programs, primarily, as I mentioned, targeted for first-time home buyers in New York State. And so we'll see some of the available programs that Sony May has. So we have a program called the Achieving the Dream. We have the low interest rate program. We have Homes for Veterans, Habitat for Humanity, and we also have 2 renovation programs. So our low interest rate is named incorrectly because you'll see later that it's not really our lowest interest rate. The Achieving the Dream program is our lowest rate, and that's usually for folks that fall within 80% of the area median income. All of our programs have income limits and purchase price limits. But some of the benefit to Sony Mae programs is that Sony Mae's overall costs and payments compared to other traditional first-time homebuyer programs, including FHA, are usually just a little lower. We also have some flexible credit options and some of the additional benefits that, again, you can benefit from our down payment assistance. So Sony Mae offers 3% of the purchase price up to $15,000 that you can use for down payment or for closing costs, or even to eliminate private mortgage insurance altogether. Next. So if you happen to be looking for a home, right, the old saying is that you buy the lowest or the least expensive home, right, in the best area, if you can find it. So if you're looking to find a home or looking for a home that maybe may need some repairs, you may be able to get into that ideal area that may be on your wish list. So Sony Mae has a program called the NRP program, that if the property happens to be vacant, we would give an additional $20,000 to be able to fix up the property. So you can combine our down payment assistance program, which gives up to $15,000 for down payment or closing costs, along with the $20,000 to be able to fix up that home. I don't know many programs that are offering you up to $35,000, but I can also tell you that many of our programs are designed to work with any other grant program that may be available. And of course, your NHS of Queens is a great asset to tell you what you may be available or what programs down payment assistance may be available for you. So basically, home buyers need less of their own funds when they're working with Sony Mae. So if you're purchasing a single family, a two family, or a condo, Sony Mae only requires that you have 1% of your own funds into the transaction, right? If you're purchasing a co-op or a 3 to 4 family home, then Sony Mae requires that you have 3% of your own funds into the transaction. So we always require, all of our programs require home buyer education. Statistics show us that folks who have gone through home buyer education are less likely to be those that go into foreclosure or into default, right? Because they really do explain from beginning to end what to expect. They really walk you through the process. So again, all our programs require home buyer education. Again, nonprofits such as NHS are the best resource for that. And so you're probably wondering, well, how do I get started? The best direction we can give you is to attend a home ownership counseling through NHS. And as we know right now, because of COVID-19, many programs are really doing it either virtually or online, and that's acceptable. And your next step would also be to work with a loan officer that can pre-approve you. So, those are the steps that are necessary in order for you to be able to do this safe and to be able to sustain, whatever mortgage you get afterwards. I wish you all the very best. This is my information. I'm here for questions. Again, and I congratulate you for taking these steps. Thanks so much for your attention.
Thank you so much, Sophia. Thank you very much. What I want to do is I want to just jump right into asking some questions. So we have a lot of questions coming in. I see that. I'm excited about that. But I want to ask some questions really quickly. I want to go. So number one, I want to ask Yvette. Can you hear me, Yvette?
Yes, I can.
Okay, I want to ask you a question because most of our borrowers or clients will be asking these questions. What should I consider as I work on my plan for home ownership? What should a new person going in, what should they consider when they're working on their plan for home ownership for the first time?
Well, the first thing that you want to consider is what is the expectation of a lender? So first and foremost, 3 criteria that we're going to look at. We're going to look at your income, we're going to look at your assets, and we're going to confirm your credit profile. Okay, so you want to look at all three of those individually just to ensure that you're on the right track. So with income, the lender is expecting for you to be working concurrently for 2 years, and we will require your document information for that.
Right.
As far as assets are concerned, now you're going to be hearing about, as Delphia had mentioned, that Sony May offers this awesome down payment assistance program, but please be mindful, any types of down payment assistance and or grants, you will not have access to those funds until closing. So as the lender, we're going to confirm that you do have sufficient funds to cover the transaction. Reason being is that when you sign a contract, you're going to have to put money down at that sign.
Okay, so that's what they should be considering for a plan, is making sure that they have money saved, that their documents are together.
Correct.
And that they actually have a plan set out. I would always tell them to buy a journal as well too. Start journaling their transition so they can actually make sure that they have something laid out. Okay.
Absolutely. And don't forget about that little box that you tell them about that you should.
Yes, that's in the seminars. That is correct. So let me, Yvette, I'm going to come back to you too. I want to ask Darren. There's a team of people that when you're going into this process, you should be looking for. What would you tell a first-time home buyer? Who is on your team when you're buying your home for the first time? You have to unmute, Dee.
So sorry, folks.
It's okay.
All right. So yeah, there are as many as 13 people that work on your team. However, there is a core group starting out with a home inspector who will go out and view the home to ensure that everything is in working order. There'll be a report that will be delivered to the second person on that roster is your attorney, who will formulate a contract and make any amendments to that contract based upon the home inspection. There will be your loan officer who will be there to provide your financing options. There is your counselor who will provide you with step-by-step instructions throughout this process, as well as your eligibility for grants, right? So this is your core team, and there will be other entities that will be made part of what will bring this to fruition, that will be
right
by that core team.
Okay, but you can't leave yourself out, Dee, because they need you.
Oh, I said the loan officer would be there.
So Darren, you would be one of the main of the core team, but that is absolutely the start of the core team. It's very important because you want to make sure that the team that you have together, they know what the process is. It's very, very important. Darren, I'm going to come back to you as well. Thank you so much. Samuel. I want to ask you a question. Sam, can you hear us? I want to make sure you're unmuted. Okay, great. I want to let the people know, what is the difference between a pre-qualification? Because remember, I do a pre-qual, right? But you do a pre-approval. What's the difference between the two?
So pre-qualification is when we at Wells Fargo do not require documents. So you just call us up. I need to get a pre-qualification done. You give us all your information, and based on that information, we issue a pre-qualification letter. The pre-approval letter is a little bit different. It's a more in-depth look at your credit, your assets. You provide the documents, and you have what we call a priority buyer letter, which is more or less what the realtors use. The realtors don't want to see a pre-qualification letter. They wouldn't take you anywhere. Most times, you have to have that pre-approval letter. So it's a little bit more in-depth. Looks at credit, assets, income, everything from A to Z, and then that's how you get your letter.
Okay, so but when they see a pre-qualification, when I'm doing the pre-qual, what's the difference versus that? Because I'm letting them know what the numbers look like, but can they take that out to go look at a property?
Most realtors would not accept that. They're gonna look for a letter that states that your credit has been pulled and your assets have been examined, and you're ready to go.
Okay, thank you so much, Samuel. Michelle, can you hear us?
I can, yes, and I did take you off of mute.
Okay, great. I want to ask you a question. How do let's say if it was myself or you, how do we as a consumer compare loan programs? You know, when they're going out to look for these programs, what should they be considering when they're going to look out for loan programs? That's very important.
Yeah, that is, thank you, Danielle. That is very important in terms of discerning which lender that you're going to choose. Ideally, you do want to get a lender that is going to be able to give you down payment assistance. Bank of America does have a down payment grant in the amount of $10,000, in addition to a closing cost grant of up to $7,500. And we also offer a program for people that may not have that much in income as far as qualifying, a 3% down payment with no PMI, which is huge because that can save you a couple of $100s a month. Not even just saving you a couple of $100s a month, but when you're on the bubble for qualifying purposes, it definitely is going to help you out. So looking at that, you know, obviously rates are important as well. We do offer really competitive rates. We have subsidized pricing when the property is located in a low or moderate census tract. So that's something else that you want to consider when you're looking for a lender. And also fees. Different lenders charge different fees. So you want to make sure
fees are huge,
that,
yeah.
You want to make sure that, you know, a lender may be quoting you a really, really low rate, but they're going to make it up on the back end and, you know, whack you over the head in fees. So those are just a few of the things that you definitely want to consider when you're looking at different lenders, the products, the programs, you know, whether it's going to behoove you to save on the PMI insurance and you need that $17,500 to qualify. That's just a couple of things that I would recommend you look out for when you're selecting your lender.
Okay. Thank you very much, Michelle. I'm going to go to Dwayne, and then I'm going to come to you, Peter, okay? Dwayne, I want to ask you a question. This is a very important one, because I know when lenders are or clients are coming to you and they're looking to, you know, they say, well, I have money and I'm going through this process. How could you share with our customers how lenders calculate affordability? Go over the housing and debt ratio for me, Dwayne, if that's possible. You're going to have to unmute.
Okay. Yeah. In terms of the affordability, which is basically the key factor to determine you know, how much house you can afford, and also, you know, if you can be approved for a mortgage. We're going to look at, you know, your ratios, your housing ratio, which is basically going to be the amount of the mortgage, taxes, insurance, and in the event that you're, you know, putting less than 20% down, you're going to have, you may be subjected to private mortgage insurance. Now, if you are looking to purchase a condo or a co-op, there's something called the monthly maintenance or the common charges, which we also will apply as part as your housing payment. Most mortgage loan programs, they do not want to see that housing payment exceed 40% of your monthly gross. And when I say your monthly gross, I mean, basically everyone can do the math, you know, how much you make over a year divided by 12, whatever that amount is, that's the amount that we're going to use as the qualifying income. Now, the overall debt, which is basically going to consist of the monthly housing payment plus the debt that also appears on your credit report. Usually that's your credit card, installment loans, student loans, whatever that appears on the credit report, we will apply that as well. And usually, if I've used the model of Sony May, that ratio should not exceed 45% of your monthly gross.
Okay. So if you could just for a second, because I know numbers can be a little tricky, Dwayne, could you just go over housing ratio, housing versus debt? Just you know, if you can do that under 2 minutes, housing versus debt, that's very important.
Right. Again, like I said, the housing consists of the principal and interest payment.
Okay.
The private mortgage insurance, if you're putting less than 20% down, if applicable. Some banks, some lenders have no PMI, which is great.
Right.
We're going to have the property taxes, which is usually we take the average, you know, 12-month average of what the annual property taxes are, and also the homeowners insurance. Normally, again, that's 1/12 of the actual annual premium.
Okay.
And again, you know, for those who are looking at condos and co-ops, we also apply the actual monthly maintenance or common charges. So
Gotcha.
that makes up the housing payment.
Thank you very much, Dwayne.
All righty.
Peter, I'm going to ask you a question. If someone's coming to sit with you for the first time, Peter, and what would they expect when they're sitting down with a loan officer? Because remember now, this is their first time. They've never seen a loan officer before. You know, they're just coming to talk to you.
Most of us don't bite. Most of us do not bite.
That is very true. That is very true. So what do they expect from your first meeting? Because they've met with me. Let's say they met with me first already. We've done a pre-qual, but now they're sitting with the loan officer, so it's a little different. They're going to be getting things that's more official in terms of them going out to go look at the property. They've gotten a lot of information. They might have even taken education. If they haven't, obviously you would send them back to do that. But what are they to expect once they sit with the actual loan officer? Could you tell them that process?
What to expect? So I mean, I'll tell you for me, right? So if I sit somewhat with somebody, and frequently most of my meetings have been, right, for the last number of months over Zoom, right? I've been meeting a lot of new clients over Zoom meetings, so just like this.
Right.
You know, I'll ask them, okay, what's their, you know, tell me your scenario. Tell me what are your goals? What are you looking to achieve, right? So do you want a one family? Do you want a co-op? Do you want a condo? Where in Queens do you want to be? Do you want a two family? So I figure out what, you know, I start honing in on what it is that they're looking for, and then what they can afford, their comfort, you know, their comfort level with a few things. Not just, I don't just say, how much do you know, how much of the homes that you're interested in buying that you've been even looking at or considering, but what is a comfortable monthly payment for you, right? I want to go, I always take a client and go to the max, right? So I say, give me your maximum on a one family in Queens. What are you looking for? They'll say, perhaps 800,000. I say, okay, fine. So let's go for the max on qualifying you, and then we can always come down from there. But I want to know, I want you to dream a little. I want you to tell me what you're looking for, what you're thinking about. And then from there, I start showing them numbers. I start plugging, and I get the information from them based on, you know, what their income is, how long they've been at their job, how their credit is. You know, the first thing that I always want to look at is, do you need, you know, you need credit help, right? Because if you need credit help, that could be, you know, 60 to 90 days to get yourself into a good credit score. You know, and I like to see people in, you know, 640, 680, 700s would be best, because credit score, of course, is connected and directly correlated to an interest rate, right? You want to have an interest rate, you got to get you have to have a good credit score. So that's the thing. The two things they want to be prepared is, you know, what's your income, what's your credit, and what kind of money do you have in the bank. So when they sit with me on the first time and they tell me all these things, I'll plug everything into a spreadsheet and then show them the numbers and how it breaks down. And you know, teach them about debt to income ratio, show them the monthly payment, you know, the full pity, principal, interest, taxes, and insurance. And then we go from there. That's our starting point, right? I want to get to the starting point, and then we figure everything out. And hopefully in that meeting, in that initial meeting, they have their documentation as well. Right. They can always send it to me afterwards.
So when they meet with you, their expected is pretty much you're going over everything, which is great. Thank you so much, Peter.
I wanna, you know, as much as I can, you know, and as much as the client is comfortable with as well.
Of course.
Right. So it's really, I dance with, you know, the readiness of the client and the comfortability, you know, how comfortable the client is in giving me that information right out of the gate, right?
Got you. Thank you so much, Peter. Deborah, I'm going to come to you, and then I want to run a poll really quickly. Alex, if you would. I want to run the poll on how has COVID affected, or guess what, let's talk about the poll of how, who is actually in the room? Who's here for first time home buying? who's here for, tenant rights as well as affordability, who's here for job opportunities. I just want to poll the room and see who's here, okay? So we can run a poll and then we'll go over the numbers, Alex, okay? But while we're doing that, Deborah, for you, I wanted you to be able to tell me, could you explain the 4 C's of credit, Deborah, in 3 minutes or less? I don't know if you can do that in 3 or 4 minutes or less, but if you can, because it's very important. Because Peter just, went over, the sitting with the loan officer, but that 4 C's is really important.
Okay, so this is the quickest and dirtiest way to really visualize how a lender gets to giving you the mortgage. So the first C is the capital. So knowing that you have to have some type of assets, and that asset piece looks at both down payment, the loan fees, your closing costs, the escrows, any reserves that's required, and from a consumer lens, any moving expenses, any setting up of utilities. The bank doesn't look at that, but you have to have assets for both down payment and closing costs.
Right.
The capacity looks at your income, and in addition to your income for your current expenses, well, how does that look with the additional expenses that you're taking on? The third is the credit history. So the lender is going to pull a tri-merge credit report, a residential mortgage credit report, and it's pulling from all 3 bureaus. It's looking at every individual who's on that application and evaluating, throwing out the high score and the low score and taking the middle score for every individual as part of that credit piece. I'm looking for 2 to 3 pieces that's seasoned, at least 2 years old, that is active in that credit box. So we can see your credit for the past, 10 years on your report, but we look more closely at the last 24 months. And then the collateral plays a role. So the collateral as a consumer and from the lender's perspective, the property that you're buying needs to appraise out, right? You don't want to buy something that, the market says it's not worth it, right? So the appraisal, because a mortgage is a secured debt, meaning there's some type of pledge collateral, the house, it has to appraise out. And so the lender will always lend you the lower of either the appraised value or the contract price.
Gotcha.
Those are the 4 C's in a nutshell.
Thank you very much, Deborah. You can't get any more thorough than that. Alex, how are we looking with that poll? Did you get any feedback from that? If you can jump in and tell us.
Yeah, so I'm gonna end the poll now. So I don't know if you could see on your screen, but we had
if you can take off the present, you can. Oh, great.
so
okay, 95%. Okay, good. Okay, good. Okay. All right, so that's great. So we know that what we're here for. Great, great, great. If you can take off the presentation so we can see more of our panel a little wider, that'll be great until we go back to it. So my next question, I'm going to pose this to you, Mr. English. And thank you, Deborah. I wanted to ask you a question. Tell me, what are closing costs? When a client is looking, when they get to the process, I might have skipped a little bit. I should have said, what's the process? Maybe you want to do the process down as opposed to the closing costs, because I feel like the closing costs will come after, right?
Okay. All right.
Let's do the process after they sat with you. Peter did that, right? So we sat with Peter. We met. Now we're at Darren. We met. From that point in the middle, Darren, where are we there?
All right. So once you've been pre-qualified for your mortgage, you're going to go out into this great wide world and begin shopping for your home. You will have at this point selected a realtor to work with, and you'll submit offers on homes that you deem are of interest. Once you have an accepted offer, the first step in this process is that you're going to notify your attorney as well as your counselor and you will hire a home inspector to go into the property to make sure that the property is in working order, okay? That report is usually delivered to you and your attorney within 24 hours. It's done very quickly, and it will detail anything that needs to be done. Any deficiencies in that property will be detailed in that report. So if there's anything that needs to be done to the home prior to you taking possession of it, you want to be able to have those things written into the contract when you sign it and leave your down payment initially, okay? So you will meet with your attorney, leave your down payment, and the contract itself will then be forwarded to the seller and their attorney for review. If they're in agreement with your terms, then they will sign that contract and it becomes what's called fully ratified. This really constitutes day one between you and your lender. Now, there's some things that are going to happen prior to the signing, the fully ratified version of the contract. Your lender may, in fact, have you submit all of your documentation, complete a loan application in preparation for that fully ratified contract, so that on day one, you can officially begin the process, okay? So and things may vary from lender to lender, but for Quantic Bank, once we have that fully ratified contract, your loan will go into processing and the appraisal to the property will be ordered by the bank. All of the background investigations will be done, such as verifications of employment. Your banking institutions will verify your assets there. There'll be homeland security checks and so forth. All these things will be done in the processing stage. Along with that processor will take the application and the documents that I provided and package it for an underwriter to review. And within 5 to 7 days of that fully ratified contract, Quantic Bank will issue a formal approval, and that's called a commitment. It'll say,
Gotcha. Okay.
Here, Mrs. Smith, you've been approved for your loan, and here's what comes next. Now,
Okay.
Committed, there'll be a list of conditions to that approval that you'll have to comply with in preparation for closing. So your processor will work with you to fulfill the conditions of the approval. And once you are credit cleared, you have provided all those conditions, and the survey will be cleared by the legal department and you're scheduled for closing. That in a nutshell is the process, right? And that typically takes 30 days from beginning.
Okay. Thank you, Darren. Thank you very much for going over that. I want to ask you a question next, Samuel. Now, Darren went over what would be looked at in terms of the process, right? Let's talk about what loan documents the client should expect to see, because things are, now that all that's done, what's coming in the mail to me? Now that you've put out these, we've put everything out there into the world, we're ready to go. What am I going to see coming from the lender? Like for example, after I took that 1003, what's coming out to me? My good faith estimate, what would I be getting from you that I would need to really review, look at, read, things of that nature? Samuel.
So you're going to get, once you've made a formal application, you're going to get in the mail, or you can do it online. We've got that online system up now. You're going to get a series of documents. The most important one that you want to look at is your loan estimate. Your loan estimate tells you the cost of buying this home. It's going to start out with the purchase price, closing costs, which you referred to a little bit 2 minutes ago, and all the costs associated with the loan. It details your in detail the interest rate, payments, your taxes, if any, if you're buying a co-op, the association dues, whatever there is, and then your final cost to cash to close. Your cash will be adjusted for anything that you've made, any down payments you've made. At the end, it's going to be your purchase price plus your closing costs, minus any down payments that you've made, any grants you're going to get, and then your net is going to be your cash at closing.
Gotcha.
Documents, you're also going to get your 1003, which is going to be a detail of exactly the same thing as not the same thing, but it has most of the information from the loan estimate. Which is going to
That's the application, in other words, right? Because they don't know all the language until they haven't took a class yet, guys. So we got to use layman's terms. So the applicant, you can say 1003, but let's say 1003 in application.
Application, right. So the application is going to have your name, address, social security number. You're just going to verify everything's correct. Summary of the transactions is on the last page, equaling exactly the mirror of the tenantry, just a little bit more detail. You're also going to receive disclosures, appraisal disclosure, credit report disclosures, items for you to review. It's going to give you some documentation that you're going to keep for yourself, which is going to explain to you what your rights are in terms of you have the right to an inspection, that kind of stuff.
That is correct.
Which comes out to you either electronically or online or by email.
Okay, thank you very much. Also, I remember in that package receiving my TILA, which is my truth in lending form, and my good faith estimate. Am I right in saying that?
You're not right, because now we have only the loan estimate.
Oh, so that took the place. Those is okay. You see, I'm like, it's combined now. Okay, so I just remember those documents coming in. I want to ask Yvette, then I'm going to come to you, Michelle. Let me take a look. I have after that, because I know there's documents that are coming in, and I'm going to go over some of the other stuff as well. Once I've got my documents in and everything is okay, I want to know what is the standard loan conditions? Like, so let's say, for example, once I've gotten my conditions, Darren said there are conditions on my loan. How do I address these conditions so that way I can move forward, Yvette? Because I know, and there could be several different conditions. I want to like name the top 5 and how we would address them so that way this loan can close. Because you know we have some serious conditions, but let's talk about the top 5 and then we can go from there.
Okay, so first and foremost, I just want everyone to be aware that because of dealing with COVID, one of the main conditions you will see continuously and ask for is updated pay stubs. The bank will continue to confirm that you are still gainfully employed. So that would be one of the conditions you would see. The second one you may see is that now that we've gotten your asset documents, your bank statements, we're going to ask you about certain deposits that may appear on that bank statement. So you have to be prepared to provide a detailed explanation with regards to those deposits, and we want to see the source of those deposits. Okay?
Gotcha.
Most things we most times will ask for too, because sometimes we can condition for it. We might wait for the actual full appraisal to come in. So we can condition contingent upon that. Okay, so those are basically really are the top 3. There's really not too many of, as we can say, as a 5 go around. It's mostly going to be around your assets and your income profile. If you do have, there's certain things with credit. So if we see inquiries, recent inquiries on your credit report, we're going to want an explanation for that as well.
Okay. We have a lot of questions, and I'm getting asked to answer some of these questions. Let's take a look.
Delphia needs to answer, Danielle, because I'm seeing that pop up online. Delphia, with regards to the rate.
Oh, the rate for Sony May?
Yeah.
Why don't we answer that question, the rate for Sony May, Delphia, and how it's calculated? Because, you know, it's, let's say if it's 4%, how do they add on the additional, if you could address that. Thank you.
So remember in my presentation, I said we have the low interest rate, which is really not the lowest interest rate, and we have achieving the dream rate. So the low interest rate right now is 3.5%, and if you take our down payment assistance, it bumps up the rate by 0.3% to 3.875. Now, the low interest rate, I should tell you that it goes according again to income limits, right? So if you're looking at the 5 boroughs, the low interest rate program for a family household size of 2 people, the income limit cannot be more than $128,040. If there's 3 or more people that are going to live in the house, then the income limit goes up to $149,380, and that's for the low interest rate. Now, for the Achieving the Dream program, the interest rate on that is 3.125, and if you take the down payment assistance, it bumps it up to 3.5%. Now, for that program, the income limit in the 5 boroughs, 1 or 2 people in the households is $102,430. and 3 or more people is 119,500. Now, one of the other things difference with Sony May is we don't have a minimum FICO score, so it's not tied to the rate, right? However, with that being said, we do want to see that you do have at least 3 lines of credit with at least an 18-month history. And we can do a combination of what they call traditional, what's on your credit report, and non-traditional, which would be like showing that you've paid your utilities, your car insurance, your cell phone on time, those kind of things.
Got you. Thank you so much, Delphia. Deborah sees some questions that she wants to jump in and answer. Let me answer the top one, Deborah, from Christopher. It says, I'm a DC 37 city member. City employee, does NHS work in combination with these services as well? Yes, we do, Mr. Gomez. So just give us a call. We'll sit and talk with you. We actually know representatives that work with them well, and we'll be happy to address any of your issues in terms of buying your home for the first time. Deborah, what did you see in the question packet that you would like to answer? As you said, you've seen something. Did you see something in there, Deborah?
No, because they keep moving. I saw the ones about the Sony May.
So we all seen that one. Okay, great. I also see, it says, let's take a look. I have another one. Okay, so everyone has the information here for all the panelists. Okay, it says, I want to be a part of the first-time homebuyers program. Okay, let's take a look. Okay, I'm going to have Michelle. I want you to answer this for me, Michelle, okay? It says, hello, my wife and I are thinking to buy a co-op, but the maintenance fee was so high, okay? So I'm sure this happens a lot, right? Is the maintenance fee so high? Is the maintenance fee deductible? If and so, how much? If they're buying this property, the maintenance fee is so high, because I'm sure you come across it, because we've done a couple of co-ops together, Michelle. How do they deal with that in terms? Do they deal with that with their accountant? How does that work?
Well, yeah, you'll have to connect with your accountant to find out how much, because most maintenance on co-op include real estate taxes. So you have to get with your accountant to find out how much is actual maintenance and how much of that is actual real estate tax to see how much you can deduct off of your taxes. I know a certain amount that you can, because I do that every year. I live in a co-op, so there is a certain amount that you can, but that's outside of my wheelhouse. Definitely something that you might want to circle back to your accountant to find out how much of that, hypothetically, if it's $700 a month, then $700, how much of that $700 is comprised of real estate taxes and how much goes towards maintenance, so that you'll know how much you can deduct.
Okay.
Did that answer your question, Danielle?
Yes, they would still have to see a tax person, but if they're really high, they need to really address it because everyone falls into a different income bracket. So I do understand that that's an issue. Let me answer this question, because a lot of people are asking about the class. So the question is from Jeanette. It says, home buyer certifications classes to be eligible for grants are offered online in June. However, I was unable to attend due to working now. People are back, working. A lot of people are doing staggered schedules. There'll be further classes online? Yes, there will, Jeanette. The classes are 24 hours a day, 7 days a week. You can take them at any time in any month, as long as when you sign in under NHS of Queens. We will be then notified, and then I can then forward once you actually take the class. And remember, you can take it at your own pace. So if you know you're working 9 to 5 and you want to just come home from work and relax and then take your class at that time, you can do that, okay? And you can take it online. It is, it's not a virtual with the person, it's more of a online learning process, okay? And then I believe we might be doing them at some point. I'm probably going to try and squeeze some virtual classes in after the September passes, okay? So I hope that answers your question. I see a few more here. Okay. First of all, they want to thank all of us for attending. Okay, unemployment. And I want to gauge this to you, Dwayne, if I can. Unemployment during the COVID affects negatively just in the last 2 years. How would that history be addressed if someone has been affected by COVID, might have been furloughed or laid off or unemployed? How is the new process if someone's looking to purchase? That's a great question.
Wow, that's very interesting question, difficult question, because normally in terms of anyone that is furloughed or been, or getting unemployment, normally we cannot accept that income because it's not, it's not consistent. It's just temporary, hopefully. So anyone that has an existing loan, who started the loan application, well, at least at M&T, their application is usually pending until they have gone back to work. They will have to provide, a letter, or we will just do a verification of employment stating, asking the employer, are they, if they have returned to work. But unfortunately, right now, anyone that is unemployed or has been furloughed, we can't really consider their income as qualifying income, only because, the fact it's not, it's not consistent, it's not permanent.
Got you.
Yeah.
All right, I want to pose this question to you, Yvette. There was a question, these are the questions from the people that are on the panel that are actually signed in and registered with us, so we want to make sure we address it. Will a lender look down at someone who has a lower paying job 1 year and then gets a high paying job the next year? So hopefully, before we answer that, Yvette, hopefully the person's in the same line of work, but if you can answer that question, because I know you're going to jump in.
Absolutely not. We're only concerned that you've been working concurrently for 2 years, because things happen. Let's say, for example, you applied for a city job, you took a test, and at one point you were working at an employer that had a lower income, and now you just got called, let's say, for MTA. So now your income is going to definitely increase. That is a welcoming, because that's more of an insurance that you're going to be able to manage the payments that you're looking to achieve. So it is not looked down as a deterrent.
Okay, great. Michelle, I want to pose this question to you. Can a person who has worked in the United States qualify for a loan? They're authorized to work in the United States. Can they qualify for a loan, or do they need to have a green card? Can you hear me, Michelle? Okay, I don't think Michelle can hear me. Can you hear me? What'd you say?
I can take it if you want, if she's not on.
Okay, you can answer that question, and I'll take it to Darren next, or Peter. Go ahead, Eva, answer that question, please.
With most times, if you are not a U.S. citizen and you do not have a green card, you have to have an acceptable working visa. And that's what the lender will look for, to see if that visa is approved on their list, and then we can determine eligibility for mortgage purposes.
Okay, okay. Does anyone have a different answer for that? Is anybody accepting different documentation on this panel, Peter?
EAD, I'm doing EAD. Cross country is doing EAD, yeah.
EAD acceptance.
EAD isn't acceptable.
Could you explain what EAD is, just in case someone has that, please?
Employment authorization, an employment authorization card or document, right? So you're allowed. It's like you're allowed to work here, right? So you don't have to have necessarily. I don't think you have to have a green card to get an EAD card. I don't know. I don't think. Does anybody know?
Yoselin, you want to chime in on that? Because I know that you've been doing a little bit of research on that, Yoselin.
So it will depend on the, it's definitely that means that you are in the process of obtaining
right.
and changing of a status, and it's all, so it all different. It seems that it will be dependent upon the lender. So to issue, whether to issue a mortgage. So the best way it is to, and everyone has a different, have different their status and different categories. So it's better to go directly to the lender to find out whether they will be able to accept it or not.
See you, Delphia. Delphia, what were you going to say about that?
I was just going to say that Sony Mae does accept DACA recipients.
DACA. Okay, great, great. Okay. Michelle, can you hear us now? Oh, you're going in and out, Mitch.
I'm sorry, Danielle. I apologize, my dear.
It's okay.
I did have to go to the bathroom. I know that's TMI, but yeah, it's real at home.
We will have to step away. We will have to step away. So I'm going to ask you a question really quick, Michelle, then I'm going to take this to you down and then you, Deborah, okay? What if you've been on a job for a year, but interested in looking now, but want to move, you want to move by the year? This is from Tracy. She's also questioning that. She wants to know if she's only been on her job for a year, but is interested in looking now. How do we address that? I think we have to have more time.
Let me say this. Bank of America will accept a less than 2-year work history only if you have evidence that you have been in school and can provide documentation to reflect same. If you do not have a 2-year work history, you are going to have to wait until you have a 2-year work history before you can actually get approved by a lender.
Gotcha.
To take that one step further in terms of you looking for a property, you can look, most realtors are not really that quick to show you properties if in fact you have not been pre-approved by a lender. So it's kind of the catch-22. I would say take that time to do all of your due diligence to make yourself so that you are prepared with your income, your assets, and that's what you can use that time for from a lending standpoint when you require a 2-year history of employment.
Got you. All right. I'm sure it's across the board with mostly everyone, but I want to ask you a question, Dwayne. I have a question from Andrea. She wants to know if her score is between 500 and 600, can she still get accepted for a mortgage? I know you have many programs, but let's answer that.
Yeah, basically it's going to depend on the loan program itself. I mean, normally on conventional loans, the minimum credit score requirement is of 620. However, there is the FHA program, which is the government program. They accept credit scores as low as 580. And as Delphia said earlier, Sony does not have a credit score requirement. However, it does have a criteria in terms of, credit trade lines and also payment history. Anyone that is looking to, apply for a Sony Mae loan, they should have a, good payment history specifically for the last 18 to 24 months.
Okay. That covers it. That covers it. Samuel, then I'm going to go to you, Deborah and Darren. Can you use any of the loans that you have in your portfolio that you're working with to buy a property that's on auction? Once you look at the home, is there an issue if it's a property that's in an auction? You're on mute, Sam. You got to unmute, dear. It's okay.
Sorry about that.
It's okay.
We do not offer any financing for auction properties.
Wow.
Foreclosures we do. Anything else we would do, but not auctions.
Is that everybody here across the board? Can you chime in on that? Because that's a great question, though.
It has to be habitable, and you don't know that it's habitable because you're.
And it's like cash at the moment. I need to. You win the auction, give me the cash. The bank is not going to do that.
No. What about you, Darren? Do you guys work with properties that are?
Yeah, so just to add in, the bottom line is that a bank will winterize a property that is up for auction. So many of the major utilities will be off. There's no way to determine what works from what doesn't. It won't meet the standard of Fannie Mae, Freddie Mac, or FHA. And if there are other deficiencies, it just won't go. So when you go to auction, typically, you still have 30 days to comply. You have to leave a down payment.
Right.
30 days to close. There's just not enough time to successfully do this.
Right. What if I see your finger up? Thank you, Darren. I see your finger up, Peter. What are we going to say?
I wanted to say that I just recently learned, which is pretty amazing, that Fannie Mae does allow for winterized properties, and I have closed on these loans. So I have closed with utilities off.
Under what program, if you don't mind us asking?
Well, it's a Fannie Mae conventional. It was a straight Fannie Mae conventional loan. It was a straight Fannie Mae conventional loan. Now, I will tell you, yeah, it has to be, you have to lock, it's got to be a direct, you got a direct sale to Fannie Mae, right? So they have to be you have to have a direct relationship with Fannie Mae. But if you do,
Gotcha.
you can do a winterized property. I just recently did it.
So I hope that answers the question for the registrar. But Dafia, I see your hand up. Go ahead.
So as I mentioned before, Sony May has 2 renovation programs, which the properties can be winterized, especially so our NRP program, which is our neighborhood revitalization program, was specifically was rolled out for zombie vacant, abandoned, right, property.
Yeah.
So many foreclosures under that program, and that program can be combined with our Remodel New York program, which allows you to put the cost of financing into the mortgage, right? The NRP gives you the $20,000 to be able to use for rehab, but if it needs additional repairs, you can combine the Remodel New York and the NRP program. And
that's amazing. That's amazing.
Amazing program.
That's amazing. Thank you. Listen, that question was over answered, right? So let's take a look at the next question we have. 20% down. How fast can you help me buy an apartment with a 780 FICO score? I love this question. Darren. Tomorrow. I'm sorry. Oh, God. Sam, I want you to answer that question for me, please. How quickly can you answer this question, help this person buy a property for 20% down with a 780 FICO score?
Well, 785 FICO, so we can move as fast as we can, but it all depends on that co-op. And as you know, co-op closings in New York City is a headache. So the lender can be ready, I would say, in about 20 to 30 days.
Right.
Getting the co-op to agree to a closing date with the co-op attorneys is another question. So you're probably going to be ready in 30 days, close in 40 days, unfortunately.
Deborah, did you want to jump in on that? I can see your face.
Well, there's other pieces to a co-op or condo purchase. So, you know, completing the co-op questionnaire, which typically either the management company completes, another outside body they may, you know, or it could be the co-op board that completes it, and they may not do it often. So you have outside factors involving a co-op when you're trying to close.
Okay.
It's not all controlled by the lender. The lender
is correct.
As Sam said.
Okay. So Darren, I want you to answer this question. Okay, so this is from, I think it says, it's Peace, the full name is not there. It says the credit score required depends upon the loan program. One could get a loan credit score as low as 580, 20%. It would depend on the income. So if someone is looking to put down 20% on a program, what would it depend on in terms of income? You know, could you give them a scenario with the score and them having 20%?
I need you to ask that question again. I didn't.
It's kind of PC. So it sounds like they're asking, they have as low as a 580 FICO score with 20% down versus someone with a 780 FICO score.
All right. So here's the deal, folks. Every bank has overlays. There are guidelines that are pretty standard, but then each bank has its own stamp that they put on it, and it's called overlays. My bank, we can't close with 580 credit scores. We can't offer you a loan, right? So our minimum credit score currently is the 640, and that's up
640. Okay.
Since COVID, right? We once were at 620, but now 640 is our minimum. The property type also lends itself to risk. So if you're talking about financing a co-op, 660 is going to be my minimum credit score on that type of purchase. So, you know, the amount down doesn't make you more eligible. There are 4 risk factors: your income, your assets, your credit, and the type of property that will all be weighed in determining your eligibility. All right, that's all I can really say about that.
Well, we appreciate that. Yvette, I want you to answer this question for me, and then I'm going to take it to, I want to go back to my questions, okay? Because we have a few minutes left. Planning to buy in Connecticut, Yvette. So that means you have to write in Connecticut, Yvette. Yvette's like, oh boy. Because it's a little bit less expensive. How do we apply for a loan program in Connecticut?
Well, again, with us, I can write in all 52 states. So with Connecticut, the only thing that I see is that most clients are still looking for some type of a first-time home buyer resource. So you would have to work with a nonprofit in Connecticut to see if they have any grants available for you. But we can use the regular standard agency products, as well as we can also use our portfolio products. And the agency products will allow for anywhere from 3 to 5% down.
Okay. All right. Okay, let me, I have my actual IT people answer this. Will this particular expo be taped, and can they get this on the recording, Alex? Would you be able to jump in to answer that?
Yeah, so this will be recorded. So we will send the slides. We will most likely be posting the video on our website and our YouTube channel. So once we set that all up, we'll be sending out an email to everybody who registered with all the information, slides, and the video where they can access that.
Okay, thank you very much. Thank you very much, Alex. I'm going to go to the board, then I'm going to come to you, Yvette. I want to ask this question really quickly because this is important. Deborah, I want you to be able to tell them what are credit scores and what makes up the credit score.
Okay, so the one thing about credit scores is just a numerical representation of your past and present credit history. So it's one component of the overall mortgage process. And what goes into a score, there's 5 factors. The first factor is the payment history. So that accounts for 35% of the score. But within that 35%, they're looking at the number of months since your most recent public record or collection. They're looking at how severe that negative transaction was. Was it 30 days late? Was it 60 days late? Was it 90 days late? And then it looks at the pattern of latenesses within that 35%. The next factor is the credit utilization, which accounts for 30% of your score. And that looks at the total amount owed to the percentage of what's available. So maxing out your credit utilization is important to really hone in when you're trying to purchase a house. The next is the length of your credit history. So it looks at, and that's 15% of the score. And that looks at the number of months that you've had a credit history on file, and then the number of months since your most recent opening of an account. And then you have 10% of your score that's attributed to the types of credit. So it looks at the number of national banking credit cards you have compared to the installment debts that you have. And then the last factor is new credit, and that accounts for 10% of your score. And it looks at the number of inquiries in the last 12 months. And then it also looks at the number of trade lines you've actually opened in the last 12 months. So for one ask, you get dinged in 3 of those factors. So that's why it's very important not to be afraid of a credit score, but just to understand the dynamics of applying for credit in a small window of time, which is 12 months. So you get dinged for the ask, you get dinged for the accept, and then you get dinged in the length of your credit history. So 3 of those factors for one request for credit.
Okay, thank you very much, Deborah. I want to go to Yvette, and then I'm going to come to Michelle, Dwayne, and Peter. I already have you guys ready, and Sam. I already know exactly what I'm asking. So my main concern, I want to answer these questions because I know there are a lot here, so I want to make sure I get to them. So Michelle, are you there? Can you hear us, dear? I want to make sure you can hear us.
Yes, ma'am, I can hear you.
Great. So the gentleman, Derek, asked the question. He said he wanted us to repeat it because he might have missed it. It says the limitations are what the question is, are you limited to what type of property you're purchasing? Okay, so when you're buying a property, are you limited to, I guess you and Delphia can answer this because you might have a separate program, Michelle. Are you limited to buying a property if it's vacant versus there's someone in it? In other words, no, from your standpoint. So tell us about that, and then Delphia, I'll have you jump into that because I know that's part of NRP. Michelle, what were you going to say?
Yes, no, there are no restrictions with regards to a property, whether it's vacant or whether it's occupied. We don't have any restrictions, so it doesn't matter.
Okay, so you don't have any restrictions for that. And Delphia, could you answer to that? I know that really covers that covers NRP. Thank you, Michelle. Does that cover NRP?
So we don't.
There's no limit. His question says, I'm sorry, can you repeat the income limitations? So also, are they limited to what type of property, whether it's vacant or whether it's, or is it based on locations? Is that limited for the location? Because, you know, a lot of it have been talked about with the FICA. You know, are there any limitations?
Okay. So with our NRP program, which is our neighborhood revitalization program, that's the only program that requires that the property be vacant at the time that you're purchasing it.
Okay.
That program has much higher income limits. It has 150% of the area median income as far as income limits, which I think in Queens is like 200 and something thousand.
Right.
But that's the only one that has that restriction. Other than that, programs, it doesn't matter whether they're occupied or vacant.
Okay, thank you. So Samuel, I want to answer you this question because the person's name is Pure. Do you recommend a co-op instead of a condo, or what in terms of purchasing? What do you recommend? That's so tough. That's a tough question. How can you? You can't.
No, I can't answer that. It all depends on. I can, but it all
depends on what they need, right? Yeah.
I'd be happy to finance any one of them, but it all depends. You know. Co-ops, as you know, though, is a little bit different to condos. Co-ops, some co-ops are 10% down mandatory, some are 20% down. So you've got to be careful with co-ops. Then there's the maintenance fee, then there's the DTI issue. So there's a lot of moving parts when it comes to a co-op. It's not the same as a one family or condo.
It's not real property either.
Yeah, correct.
Right, absolutely. Darren, can you answer this question? And then I'm going to come, I'm going to go to Peter, then you, Darren. So Peter, if there's a bankruptcy and there's a discharge, could you tell me what your programs have to offer in terms of the bankruptcy discharge? Do we have a 2-year, 5-year? How does it look if there's a bankruptcy on someone's credit?
Sure. Actually, it's funny because I just answered this question on the side screen there. So it depends. It depends on the loan program. And it depends on the discharge or dismissal, and I don't know it off the top of my head, so I'm gonna look what I wrote.
That works
for Fannie Mae, and it depends. Okay, so let me just look this up. All right, does any of my team members here know this off the top of your head? I know it's 2 and 4 years. Go ahead.
Okay, go ahead, Darren.
Yeah, so with a Chapter 7, as long as you've been discharged for 2 years, you're eligible for Fannie Mae and FHA.
And FHA, right.
As far as Quantic Bank is concerned, right? So with FHA, with Chapter 13s, it's a bit different. So there's a distinction between dismissal and discharge. So if a Chapter 13 is discharged, meaning that you've paid all the debt back to your creditors, then there's a 2-year waiting period thereafter. If it's really did not complete that bankruptcy, then there's a 4-year waiting period after dismissal.
Okay, that's a great question. Dwayne, I want to gauge this to you, because I know you get a lot of multi-units as well. The person asks, if you want to buy a 4-family home, do you take all the rent, the potential of the rent as income to qualify? Could you answer that question?
Normally, we take 75% of the projected rental income, and the amount that we actually will use is going to be determined by the appraisal. So once the appraisal report comes back and it states, exactly what the amounts, what their, I guess, recommended rental amounts are, we will use that and use 75% of that total and apply it as qualifying income in addition to their income that they make, from their job.
Now, Dwayne, can I ask you, does that assume any program? Because I know that Fannie Mae and Freddie Mac have recently, they've changed their guidelines on that.
Mhm.
I don't know. But
Well,
I
I
don't know
mean,
if you're
yeah, I mean, M&T, this is, we use 75%.
whether
of the rental.
the person's had a rental history or not, whether they rented.
Okay, I see what you're saying. Yeah, now there is, for Sony Mae and FHA, if they're a first-time home buyer, they can get financing for a multifamily home. I think with conventional now, they have to have a history of owning multifamily.
Well, prior to, okay.
With
Right.
Freddie, yes. With Freddie, yes. With Fannie will actually allow, if you can show that you've been paying rent in a timely fashion for the last 12 months from one of your bank accounts, with either a check or a money transfer, and you've been paying rent to not like a family member, but like a landlord or a management company, then with Fannie, you can actually use the rental income. Freddie, you can't. Freddie, you actually have to have.
Gotcha.
Rental experience.
Right. Let me gauge this next question to Yvette. Yvette, I am married and I just started working, but my husband has been working for 2 years consistently. They have a child, they have good credit. How would they use both incomes to qualify, or they can't? The husband's been working for 2 years, but she's just started working.
Okay, so if she just started working,
excuse me,
assuming it's because she had the baby, so she was home.
Right.
If she just recently started, then it's a good chance that they're not going to use her income. She has to be showing that she's working concurrently for 2 years, because as we've already stated that the only time we can remove that and waive is if you have just received a degree, come out of school and started working, and you have less than a 1-year history. Then we can do it, but in her circumstance, we would not be able to utilize the income from her.
Got you. Okay. Let me see. Hold on. That was a great question. Okay. Can someone answer the question for me, please? Okay. Michelle, I want you to jump on and answer this. Can you answer this question for me, please? What if I want to buy a 2 to 4 family home? Do you take well, you know what, that question was answered. That was the question. I'm just trying to take all the answers here. So let me go back to my question.
Same question for rental.
Right, exactly. So I just want to make sure I was not missing any questions, guys. So Michelle, my question to you was, what if I want to purchase a home and it needs repairs, not repairs so much, but if it needs any work on it, when you're doing your loans, if the repairs aren't done, let's say you did an FHA versus another type of loan, how would you guys close on that, and what would be the process with your underwriter? Would they make those conditions be met? What would happen?
Well, it depends on the nature of the repairs. Okay. If there are structural issues with the property and there's functional obsolescence that's going to affect the overall marketability of the property, then yes, Bank of America is going to have an issue with that, and you're going to have to get those repairs done prior to closing. And it really depends on what the appraiser states, because you can have things that are, maybe cosmetic in nature or a little above cosmetic in nature, but if it is going to have a health and safety concern or affect the marketability of the property, you are going to have to get those repaired prior to the loan closing, especially for FHA.
You. Darren, I want to ask you a question because I know you guys have a component, you have a repair program, right? Are you doing 203K? I want to make sure that's clear.
We are doing 203Ks currently, yes.
Okay, so if that question, I'm going to answer it a little differently. If the property needed repairs, remember now, I asked her what would her closing process be. but if the property needed repairs, what products did you are in the marketplace for someone that would need the repairs other than the NRP? I want to talk about the other stuff too, because we know NRP is there, and we know the other program as well.
Well, the FHA 203K program will allow you to acquire the home as well as to have the home renovated. So the bank can lend you up to 96.5% of the acquisition and up to 110% of the subject to value for the repair. So just to give you an example, if you're buying a home that's valued currently at say 400,000, but after you do the repair, it'll be worth 600,000. Well, we can lend you up to 110% of that subject to value of 600,000 for the repair. Obviously, giving that you can afford that amount and that you need that type of work. But initially there'll be what's called an FHA consultant that will determine what needs to be done to be able to bring that house to HUD standards. There'll be a contractor that will give us an estimate of what those expenses will be. We'll add that to this gross number of the acquisition price, and to the acquisition and the rehab, we also have to add a couple more elements. Like there's a contingency reserve. There's a 10% reserve that needs to be established for things that you can't see up front. You can't live in the home while the work is being done, so there are going to be monthly payments that are going to be escrowed based upon the time limit that the contractor says they will need. So those things will need to be taken into consideration. It's also important, folks, to know that this loan can be very expensive. The interest rates are higher on 203K loans because of the rehab risk involved, or the construction risk.
Of course, right.
You have to really love this house to be able to move on this, because not only are you going to have all of these other expenses that are associated with the repair, you're going to have to absorb a higher interest rate as well.
Okay. Sophia, I see your hand up, and then I want to ask Sam a question, and I want to go over the HPD. Did you have your hand up, Delphia?
Yes. So the program, not just the NRP.
Thank you, Darren.
Our Remodel New York program is sort of like the 203K, with the exception that there is no bump up in the rate for that particular program. So you can rate again, and you can put the cost of, and it is the cost plus repairs is what you would be allowed to borrow.
Just to let everyone know too, the deck will be available for you to look at. You can always jump on the link for Sony May too to get some details. Yes, Deborah? Yes, dear.
I saw a very important question, and I'm surprised that don't.
Is it at the bottom? Is it at the bottom? Because I thought I answered all that.
No, there was a question about what's considered a first-time home buyer, because the individual says, my wife owns a property, but my
I missed that question. Okay.
So, if you can find what a first-time home buyer is.
That's very important. Samuel, can you answer that question, please? What's the question was, the wife currently owns something, but the husband does not?
Right, so the wife will not be a first-time home buyer because anyone owning a home or having interest in a property in the last 3 years is not considered a first-time home buyer. I know Sony May has their own rule, am I right, Delphia, where if you have a combination of one person owning and one person not, or does it mean that everybody is disqualified?
So the husband is considered a first-time home buyer because the wife is the one who has owned previously.
Right, but so then if they both come to you,
yes,
then only one person has to be the first-time home buyer.
Correct. Yeah. Okay. So in other words, he can purchase the property. He's a first-time home buyer. She is not. We're going to take her income into consideration just to make sure that it doesn't put them over the income limit. Right.
Gotcha.
But he will be purchasing the home as a first-time home buyer. He's the only.
There's one applicant.
Yeah.
It's one applicant. Will he qualify for the grant as well?
Yes. Yeah. He can do the down payment assistance, and if that property.
But let's be clear on this. For all the other programs that we're dealing with, all the other grant programs, no one on the application can be first-time home buyers. Alex, could you, you cannot be first-time home buyers.
No,
You
cannot own a property.
You cannot have owned a property in the last 3 years. I'm sorry. Listen, we're talking about so much stuff. Alex, could you run that deck for me for H? Yeah, sure, Michelle.
And the
Yeah, I
income
just
limit,
wanted to
and the
say that
income
I
limits
do know
just
that
went up.
there are certain, I do
Go
know
ahead.
certain lenders that will
Michelle,
require
we're
that
losing you.
you have,
Okay, there you go.
I do know that certain lenders require that you cannot have any ownership interest in a property in the last 3 years, primary residence, but Bank of America does not consider that 3-year criteria. So as long as at the time in which you are purchasing the property, you are not a borrower of a primary residence, you don't have to, that 3-year thing is out the window. You don't have to not have ownership interest. And so if you've owned a property last year, as long as it's not your primary residence, you would still be considered a first-time home buyer.
So they would qualify for the grants that Bank of America has. Is that correct?
Correct. Yes.
Okay. Okay. Oh, that's
so
amazing.
Words,
I mean,
if you have a second home, you can have a second home as long as you don't have a primary residence at the time, and it doesn't matter what that time frame is, then, we don't consider that 3-year period of being a first-time home buyer.
Got you. Okay, thank you. I appreciate you chiming in. So I'm going to go over the HPD grants since we are talking about that right now because we only have a few minutes left, guys. The Home First grant is administered by NHS NYC. It's 6% of the purchase price that is capped at $40,000. For first-time home buyers, it must be, as we just discussed. Home buyers education is required. There's a HUD home inspection required. Why is that? Because you want to have every property that you're buying and investing your money in, you want it inspected. They will just add an extra sheet for that for the caveat as an inspection. There's a 10-year residency requirement. A residency requirement means you must live in a property as your primary residence for 10 years. There's income and purchase price limits that apply. Let's go to the next slide so I can tell them what that is. If there's a one-person family household, that's $59,750. That's at this time. I looked at it as of yesterday just to see if it's gone up, and it has not. So the income has not changed yet. Yes.
An hour ago?
Are we serious?
Yes, it just
We just received it. Yes.
In 1 hour. Wow.
One person household is $63,700.
No way. Oh my goodness. So we just got it. You know what? I did see an email from Tamika, and I was not sure. That's amazing. Amazing.
So a 2-family household is $72,800.
Wow.
A 3-person household is $81,900. A 4-person household is $90,950. And then a 5, I only wrote up to 5. 5.
That's fine.
Is $98,250.
Listen, thank you guys. And that's less than an hour ago. You gotta love that. So guys, you can't write this. This is live, and the income limits have just gone up. So with that being said, the purchase price limits have gone up as well. What I want you guys to do is, Alex, if you can put this in the section for them, I want them to go to hpd.gov. And what they'll do is they'll be able to go onto the website and go into Home First program. I don't even want to give those numbers because those numbers have probably gone up as well. The income limits and the purchase price numbers were supposed to go up, and we were being prompted for the last couple of days, so I've been following it really closely so I can change these numbers, but they hadn't changed. So they changed less than an hour ago. So you can't even, that's amazing. That's amazing. So, I mean, listen, my panelists, you can, I want to thank you guys so much for being here with us. I think we answered mostly in all of the questions. And I just want to wrap up with letting you guys know that I appreciate you. Well, you know that, my partners. I appreciate you very much. I want to take much more time with this and, you know, with the questions and answer session. But we don't have that kind of time, so I wish we did. But what I'm going to do is I'm having 3 classes come up in July, August, and September. July 21st, August 12th, and September 19th. and one or two of these panelists will be on with me. So please tune into those. It'll be more in depth of a seminar. We'll be going over the obviously the first time home purchase process. If you want to sign up for any one-on-ones with us, that would be under the Appointment Plus under our primary website, which is Neighborhood Housing Services of Queens. .org. You jump on and you can go right to scheduling a one-on-one appointment. And I have several available, so please jump on and sign in. You will need documents, so please have your documents ready before you are prepared for your appointment. And guys, I just want to say thank you so much for being here. And I know that that this is really appreciated because education is power. I want to do one more poll about how COVID has affected anybody. And let's see where we stand from there. Guys, if you want to stand off of that, and if you have any words, I would just like to say thank you. And I want to make sure everyone is safe and healthy during this process. So I want you guys, my lenders, to see this, because what will happen is when we get questions, because everyone is asking for your information over and over again, they're going to probably be reaching out to you in some way via email. They could be affected by this. So everybody, please take your time and answer. We'll give it a moment as we transition. Alex or Yoselin, if you want to jump in, if we have any of our special speakers coming on, that would be greatly appreciated. And again, everyone, Michelle, Darren, Deborah, Delphia, Peter, Dwayne, everybody, Yvette, I want to thank you so much for being here. I really appreciate you guys. I really, really appreciate you guys.
Appreciate this as well.
Right, Samuel, thank you so much.
Thank you all.
If you want to hang tight for a moment just to see what the polling question was, that's fine. We're not leaving. We're going to jump on, and Joelle's going to jump in a minute. Thank you very much.
Yeah, thank you, and stay tuned. We have more to come. And if, let's say that you are interested in your home buying opportunities, but now we're going to go into renter and affordable housing.
Yes.
Soon. Because if it's not for you, it's someone is going to help out one of your neighbors. So the more that we are able to empower and the more that we know, the more opportunities we're going to have. We want to thank also all the panelists for this. Is an incredible, they have an immense of experience. They care. We often think of financial institution are not caring for the community. Well, these are the folks at these institutions that care for us. They care for the low to moderate income to be able to have the opportunities. We often see that in times of emergency or where we have the economic downturn, that investors in our community, they take advantage of our communities. Well, we now have opportunity where we can continue to invest, and we have folks here in these financial institutions that are going to be able to lift us up and provide opportunities for us and our families. So I want to thank each and everyone. They have been in the community. These are not folks that this is not just a job for them. This is a career, this is a commitment, and we are very grateful and to partner with them, and because they go the extra mile to assist our clients. So once again, thank you, and let's continue our conversation and our Housing Expo, and with our esteemed colleague, Joelle, who is ready to continue. And I know that also there was a poll that was provide a few seconds so we can see the polls. So thank you.
Thank you so much.
Yeah, so
Yes, thank you everyone for joining.
Thank you.
I'm going to share the results quickly.
Okay.
So you'll see a vast majority.
Wow, look at that. Everyone's affected with the mental health issue. That's amazing. You know what it is? It's been a lot to be, we've been going through a lot, so.
Wow. Yes.
Wow, you see that, guys? So when you get, because I know my lenders are going to jump off, when you get these emails, you guys want to handle everybody with kid gloves because everyone's been affected by this COVID and in some way.
Yes,
So,
we live in New York City. Yeah, we live
yes.
in New York City. We have been affected, and for us, in terms of that's what we want to be able to, whether it's mental, whether it's health, financial, but we are all in here together, and we really appreciate all the the efforts, and I can't believe that within 3 months it has been a roller coaster.
Right.
And it's a roller coaster every single time. Things are changing, as you can see, even with the HPD guidance and a new income that they have increased. So we have to be vigilant and continue to get informed, and also inform our neighbors, because if one of us is okay and the other one is not, then we are not all okay. So thank you, and we're going to continue with our Housing Expo, and then Joel can jump in.
So hi, good evening, everyone. My name is Joel Santos from the NHS of Queens. I'm one of the counselors, and I primarily handle tenants' rights, affordable housing, and financial counseling. So I'm going to go over some information on tenants' rights and affordable housing. I'm going to move through a lot of the stuff a little quickly. If at any point you see one of the slides or see any of the information that you want more on, you can always reach out to me, to us, and we can set up an appointment where I can go over that particular topic in a little bit more detail. I saw that many of you are interested in first-time home buying primarily. However, you know, a lot of you are tenants, so a lot of this information may pertain to you or useful to your neighbors. Also, affordable housing may be a good in-between from where you're currently at to your dream of home ownership. So I'm going to try to provide as much information as I possibly can, given the time frame that we have. So let's see here. So one of the first things that I want to do is, before anything, is it's always a good step to take, it's always a good practice to take a step back and see what the New York City rental stock looks like before we talk about whether it be rights or whether it be affordable housing. So New York City has about 2.2 million units of rental housing available to the nearly 5.4 million renters in the city. The bulk of the rental stock is in the private sector of the housing market, which consists of privately owned rental units operated and leased out by owners, developers, investors, managing agents as for-profit ventures that subdivide into regulated and unregulated housing. Unregulated units are those typically within the 1 to 5 family building range with no government regulation in terms of the amount of rent that can be charged or the lease requirements. And the regulated units are those found in buildings of 6 units or more, in which the rental amounts, the annual increases, and other factors are subject to government regulation. So most of the tenants' rights conversation will focus on the private part of this chart, and the affordable housing piece will go more into details about the subsidized forms of housing and their subclassifications, as we see on the screen. So tenants' rights. So one of the first things, a good starting point, is to talk about the regulated units. What control or rent control and rent regulation are, there's a lot of confusion going on with these words. So you have some historical information there, but essentially what rent control and rent stabilization are, they're codes of law that a particular unit in this city of New York may be subjected to. Rent control is kind of like the older statute of laws and regulations that has slowly been transitioning into what rent stabilization. So usually, like for example, rent control are the unicorns of the housing market. As you see here, the criteria for a rent control building unit has to have been constructed, built before February 1st of 1947, and the tenant has to have a continuous tenancy prior to July 1st of 1971. So again, there are a few of these out there, but most of these, once they are vacated, they're re-rented under rent stabilization, which is the kind of like the newer set of codes and regulations. So essentially, what rent control and rent stabilization, what they are not a housing subsidy that can be applied for. They are not a guarantee of low rent. You know, I get a lot of people that kind of like use these terms interchangeably. They're not protections that you can apply for any particular unit. They're not protections that can be applied to any housing unit, and they're not protections applicable to all housing units in New York. So it's very, very, it's very important that you're aware of this. And just keep this in mind in your current rental situation, or search for a different rental situation. So unregulated units, typically those, as we said before, owned between the smaller units, between the 1 to 5 family unit range. These are newer, smaller buildings on combined lots, apartments in single or multifamily homes, and co-op apartment rentals. Now, this last section is very important because there are a lot of buildings that have been bought over by different companies, and they have started the co-op conversion process. So even though the building looks like it might be subjected to rent control or rent stabilization, what they're doing is they're starting the slow process that can take decades, where you might be rented a unit that was previously rent controlled or rent stabilized, but is now being rented as a property of a cooperative unit, and then therefore not subject to any of the regulations and the protections of rent control or rent stabilization. It's very important to keep that in mind. There are buildings in New York that actually can have all different sectors of the housing regulations under one roof. So we're talking about, we have co-ops that the tenants own. We have co-ops that tenants rent. We have rent control and rent stabilization. They can all be very well present in one building. Your lease would be the best indicator of what rent stabilization, what any rent regulations that apply to your unit, if any. So it's best that you look at that, and if you have any questions, bring it to an organization like NHS or any other housing services legal provider to disambiguate anything that may not be clear. So just some pros and cons between regulated and unregulated units. Regulated units, again, they offer broader tenant protections, included but not limited to the right to a lease renewal if the tenant is compliant with the lease agreement, succession rights, rental increases subject to government, and rental increases are subject to government regulation. So succession rights is that you can actually leave the unit to certain family or familial ties as a continuation of your lease, not subjected to the increases or subjected to additional fees for lease renewal. So so that's on the regulated side. Unregulated units, they may not be required to provide renewal leases. Typically, tenants continue as month-to-month tenants after the first lease expires. They do not have to honor succession rights claims. Rental increases are at the owner or managing agent's discretion, though it is very common to see that in some cases, tenants do not experience any increases. Oh, I'm sorry. Give me one second. Sorry, guys. This is live, folks. So rental increases are at the owner or managing agent's discretion, and some tenants do not see any increases throughout the life of tenancy. Again, it's not the norm, but it has happened. They can commence holdover proceedings in court at any point. So again, they can request the property for personal use at any point throughout the tenancy, independent of any compliance. So independently of whether you are in regulated or in unregulated units, there are certain rights that are across the board. The first one is the right to an eviction. In the state of New York, anybody occupying a rental unit for more than 30 days, independent of rental payment status, lease agreement status, or any of the protected categories, source of income, family composition, gender, immigration status, or sexual orientation, has the right to an eviction process. And we'll talk a little bit more about that in the slides that follow. Another is the right to an acceptable standard of living, a unit that complies with the basic requirements for an acceptable standard of living, including but not limited to heat, running water, hot water, electricity. Another right is the right to live free of discrimination, the right to not be subjected to any discrimination based on the protected categories. So eviction flowchart. So evictions can be triggered for two reasons. The most common is the non-payment, where here the issue is the money. You pay, you stay. And then there's the other one is a holdover, which is the landlord or the owner is requesting physical possession of the property. These are a conversation within themselves, but as you can see in the charts, there is a process that has to take place. It's not, you can't go from owing rent or being a day late to your rent to having a marshal at your door enforcing an eviction notice. Like, this is not the case. This is the process that has to happen. In the event that something irregular happens where this procedure is not followed, it is the tenant's responsibility to reach out to 911 or to the housing court to request an illegal to report an illegal lockout. And essentially, both proceedings, there's no specific time frame on how long they last. Judges usually handle these at discretion. And in the non-payment case, you will pretty much negotiate the terms and conditions, whether you will become current or vacate. In a holdover eviction, pretty much it will be the surrender of the property. These can take anywhere from 3 to 6 months in some cases. And some factors that they take into consideration are if rent is paid on time or how much rent is owed, if the unit is in need of any repairs, if there are seniors over the age of 62 or minors under the age of 18, if the unit is legal or a legal residence, or illegal, like in some cases like a basement. So again, these are just the factors that they take into consideration in establishing the timetables of when evictions are and how evictions are going to be carried out. So I'm going to go over some legislative and tenant protection measures in response to COVID-19. As a lot of us heard, housing court is, for the purposes of evictions, are closed and suspended until August 20th. If you're current in an eviction, it was pushed to that date. Any things that are filed, might have seen in the news that courts reopened recently for these filings. Again, they're just opening to kind of like handle the influx of cases, but any hearings will be pushed back to that date or more. Tenants, landlord and tenants of residential properties can now enter into written agreements to make use of the tenant security deposit to pay arrears or rent due. Again, the option must be exercised by the tenant. The landlord cannot impose or suggest this to you. And the security deposit funds must be paid back within 90 days. Evictions do not fall under emergency cases. And the court is open for emergency cases for illegal lockouts, housing code violations, and repair orders. Marshals can execute warrants of eviction. And it's important to remember that during these times, again, you have the right to not be subjected to any discrimination based on protected category. And one of the new protected categories that has been added is positive COVID-19 diagnosis. So it's very important to keep that in mind. So I know we went through that very quickly, and again, I'm trying to stay on topic. So if at any point you have any questions or need more clarification on a particular topic, I'll try to see if we have some time for Q&A at the end. But you can always reach out to us and request an appointment, and I can go over any one of these details, one of these topics in more detail in a tenant counseling session. So now we'll also talk a little bit about affordable housing, what it is, some of the types, and just some information that you should keep present. So what is affordable housing? Affordable housing is a term used to denote housing in which the monthly rental amount is about 30 to 40% of the tenant's income. It's usually subsidized by government funding lines. And again, this is just an import of that earlier first slide that we saw, where affordable housing in New York is kind of subdivided into 4 categories: Section 8, Mitchell-Lama, public housing, and housing lotteries. And we'll focus more on the housing lotteries and kind of gloss over the other ones. And you'll see the reasons for as I'm going over the information. So Section 8, commonly known as the Housing Choice Voucher Program. It's a program that works as a rental subsidy that allows families to pay a reasonable amount of their income towards their rent. Eligible families receive a voucher to begin searching for housing, and generally families will pay no more than 40% of their adjusted monthly income towards the rent share. As we know, there are very few opportunities in the state of New York that offer to a tenant to pay 40% or less of their income in rent, which is what is recommended. Most of us are paying upwards of 50% of our incomes or more in rent. So that's what this program is here to mitigate. Section 8 vouchers can either be housing choice or project-based. Housing choice is pretty much the subsidy is linked to the household, not the unit, so it's portable. Tenant can use this to rent any units in the private market. Project-based is where the voucher is linked to a particular unit and the subsidy is given as long as the tenant occupies that unit. If the tenant vacates, the subsidy remains for the next tenant to occupy that unit. And in New York, vouchers can be operated through a number of different city, state, and federal agencies. Most common two are NYCHA, the New York City Housing Authority, and HPD, Housing Preservation and Development. Now, in New York, unfortunately, the Section 8 program is frozen, which means that due to the lack of funding, which means that the program kind of froze in its current capacity. It does not have the funding to expand, issue new vouchers. So usually whoever had a voucher continues receiving the subsidy. If someone gives up a voucher, there was a waiting list that was frozen with the program, so they keep working with that internal waiting list, but they're not honoring any new applications at this time. Then there's the Mitchell-Lama program, and again, it provides rental cooperative housing to moderate to middle income families. And again, it's either to rent or purchase cooperatives. There's no master list of Mitchell-Lama properties. Mitchell-Lama Connect is a good resource that has a lot of them, but there is no master list that has them all together. And each development requires that you apply separately. Unfortunately here, again, most of the waiting lists are closed given the fact that they have enough applicants in their respective wait lists to fill vacancies expected in the foreseeable future. Periodically, they open up. Again, Mitchell-Lama Connect, which is kind of like a version of Housing Connect, but for Mitchell-Lama properties, is a good resource to start your search if you're interested in this kind of affordable housing program. Then we have public housing through NYCHA developments, which is the first thing that comes to mind when we talk about affordable housing. And in general, public housing refers to units constructed and managed for the government, by the government for low-income households. In New York City, public housing developments are managed by the New York City Housing Authority, most of which are funded in large part by the Federal Department of Housing and Urban Development. Homeless and domestic violence victims are a high priority group. Social services are available in a number of these developments, and you can apply online through NYCHA's website at any time. So very brief overview of what the NYCHA application process looks like. It starts first, you apply online through NYCHA's website. You usually receive a public housing acknowledgement letter within 7 to 14 days after application, and then your application goes on a general waiting list. It is your responsibility to recertify it every 2 years or update your application when significant changes occur. Then when your application when they reach your name in this general waiting list, then you go to an eligibility interview to determine, again, to reassess your eligibility. Applicant selects a development within their boroughs of choice. At the time of application, you are to select 2 boroughs, a primary and a secondary choice. Then your application gets pulled from the general waiting list and then gets certified to the wait list of that development. And then there's some time that goes by. Once they reach your name in that particular waiting list, then you go to another verification interview. After this point, if your eligibility is determined, you view available units in that development, and then that's when the lease and the lease signing and the move-in happens. Now, how long does this process take? Unfortunately, it can take anywhere from 5 to 20 years. Given the fact that NYCHA units are transferable to certain familial ties. Also, there's very low turnover of these units. And there's a very high waiting list due to the fact that the waiting list is open year round. Now, anything that I am saying should not discourage you from applying, because again, there's 0% chance that you'll be called if there's not an application that's been submitted. So the next part is how HPD Housing Connect lotteries, which is primarily what we help you with at NHS of Queens. So what these are, the New York City Department of Housing and Preservation Development and HDC create affordable housing opportunities through public-private partnerships with real estate developers and community sponsors. So essentially what these are typically private buildings that developers build for the general market. And what they do is they trade off affordable housing units for tax subsidies. And these units that are as part of the exchange have to be rented to HPD's Housing Connect system to ensure your fair and equal access for all. So that's what these lotteries are in a nutshell. So where can you find these affordable housing opportunities? Housing Connect's website, HPD Housing Connect, and I'll show you some information on that in a few moments. There's newspapers, ethnic and local publications. HPD and HDC's website has links to it. Also, you can find a housing ambassador organization in your area. We, NHS of Queens, are a local housing ambassador. Also, your community boards and elected officials tend to have this information readily available. So you can apply online or through the mail. To apply online, you go to New York City Housing Connect. To request an application by mail, you send a self-addressed envelope to the particular development, and I'll show you where to get that information in just a few moments. Very important that you only send one application per development, as submitting duplicates online and in mail can result in the disqualification of your application. And the deadline, each lottery has its particular deadline. It must be postmarked or submitted no later than the due date, and late applications are not considered. So this is the current HPD Housing Connect portal. You have the link up there, and again, we can provide you with this information should you need it. And you can go ahead and register and create a profile. The advantage of this is that you only have to populate your profile once, and as long as you keep it updated, you can use it to apply to multiple lotteries, as opposed to submitting applications in the mail, where you have to fill out the same application sent to a different developer each time. They're currently working on upgrading this and making it a more intuitive search through HPD Housing Connect 2.0. However, right now, I believe they're still posting all the availabilities on the older version of Housing Connect, but you can still go in and start the registration process for when it goes live. So where you can find the information if you're looking to do it the old-fashioned way is in the public housing publication sheet. So usually these are available in local newspapers and publications, and it has a lot of information regarding information regarding a particular lottery. So just to break down here, it'll have the name of the development, how many units, the income guidelines, any set-aside preferences, and we'll go over those in just a moment. It'll have the information for the developer, where you're going to send your self-addressed envelope to, and just pretty much any information that you need to know before you have to apply for a particular lottery. The deadline, also very important, will be on the publication sheet. So what information do you need to apply? If you're applying online, you only need to complete your profile once and use that same profile to apply for multiple developments. What you primarily need is the name and address of the applicant, information of household members who will be living in the unit, income of all household members 18 years or older, subsidies if you receive any rental subsidies, if you have any, if there are any members of the household that are disabled, current landlord and rent, assets if applicable for all the household members over the age of 18 and older, is information that you'll need to populate that primarily, to populate that application. So the Housing Connect lottery process, essentially how it would work is the lottery opens, applications are submitted online or via mail, then the lottery closes, mail application processing for the lottery happens. So usually the applications that are submitted online remain in a kind of like a computer, and they just reside there while the mailed applications are inputted into that same system. Once all the data entry is done, applications are randomized and log numbers are issued from number 1 to whatever number of applications were received. Then they go ahead and they do the special preference tenant selections, and I'll talk a little bit more about that in just a moment. Then they do the general preference tenant selection, and essentially they call from the lower log numbers to the higher ones. Then once they do that, lease up is completed, and in some cases a wait list is generated, even though they're not all developments are required to keep a wait list. Now, the log numbers, you have access to them only if you apply online. If you send an application via mail, you'll probably not get any documentation or any follow-up unless you're selected. So that's kind of one of the advantages of using the online system. And the log numbers are also a good way for you to self-assess how you fared in a particular lottery. So going back to the lottery that I used in the publication sheet, that was a rather small lottery of 31 units. If you see that your log number is between 1 and 31, then you have a very good chance of a high probability of being called, since you're within those first 31 applicants. If you see that it's 32 and above, there's a lesser chance. And then if you happen to see that it's very common that your log number is 10,235 or 80,368, or just any random number that's very high, it's highly unlikely that you'll be called because they won't have to go through so many applications to fill 31 vacancies. So essentially, that's how the Housing Connect lottery process works. So there are some lotteries include some set-aside preferences, and what this means is that they set aside units that are given particularly to people that meet certain preference criteria. So some of the most common ones, community board preference, they do a preference to people that live within the community board that the lottery is being constructed. They usually set aside some units for municipal employees. for people with mobility impairments, for people with vision and hearing impairments. Some lotteries offer a preference or exclusively for seniors. Some set aside some units for people that are transitioning out of public housing. And some lotteries have trade or special population preferences. Again, these are less common, but can be part of a particular lottery. So the income guidelines, and this is where a lot of confusion to the affordability of these lotteries comes into question. And it's based on the federal median area income of where the lottery is being constructed. So the objective here is that people that reside within a particular area are able to afford these rental opportunities in that given area. So that's why we may see that, for example, in some cases, 60, people with, it may be common in that particular neighborhood that the area median income is between 60,000 or 80,000, and it's affordable based on those standards, not on general standards of affordability of the city as a whole. So that's one thing to keep in mind. So what happens after you submit an application? We went over how the process is, how the lottery takes place, and how the numbers are generated. If you're selected, and you appear to qualify, you'll be invited for an eligibility interview. Interviews are usually scheduled between 2 to 10 months after the application deadline, and you'll be asked to bring certain originals and copies of certain identifying documents from members of your household. It is very important that you go to your interview. Usually you'll be contacted by the developer. It is important that you confirm your appointment immediately or reschedule it as necessary. However, you're only allowed to reschedule it once. And going to the interview does not necessarily guarantee that you'll receive an affordable housing unit, given that there may be factors whether that lease up happens a little bit quicker, or there may be factors that affect your eligibility. So it's not a guarantee of an offer for a rental unit. So usually just bring your documentation and wait for confirmation. Some of the documents that you may be asked to present: birth certificate, IDs, pay stubs, tax returns, proof of address, and other detailed information for your household. After the developer verifies your eligibility, the city employee then does a review of your file for accuracy, and they contact you if there are any remaining questions. Some additional considerations as to this process: credit history. A lot of these developers, they run a credit check. You can now opt to not be part of that credit check, but you have to, if you decide to opt out, provide substitute information, meaning rental payment history, utility bills, or any sort of information that establishes good payment history. You can't not consent to the credit check and not provide the documentation. They kind of go hand in hand. All family members over the age of 18 must attend any interviews. If you're self-employed, you must be self-employed for 2 years for them to consider your income. And if you have an unborn child as part of it, that's going to be formed part of the household, you write unborn child on the application, and whether it be online or in paper, it does provide the opportunity for you to do so. If you're found not eligible, you'll receive a rejection letter. If you disagree, you can appeal the decision. You usually have 2 weeks or 10 business days to appeal. And in the rejection letter will be all the information of what you need to include and who it needs to be addressed to. But particularly, this is to the developer. So if I know I went through that information very quickly. If you need any more information or assistance with this process, you can reach out to a local housing ambassador in your area. We at NHS of Queens are a housing ambassador. Information is right there. And I'll share the information with you in a few more slides. And just some notes on additional information. There are senior housing developments and alternatives. The best way to find these are through the lists kept from the Department from the Aging. They have lists for each particular borough. And essentially for senior housing, qualifying households, at least in most cases, all of the members of the household, or at least the head of household, need to be 62 years of age or older. And again, the applications are usually kept available by contacting a particular development, and they have their own wait list. There isn't a general portal to access these opportunities. Now, some other types of housing subsidies. There are some vouchers there available to help people to cover their rent. Now, just some of the common ones offered through HRA, Link, SEPS, and the City FEPS voucher. And they each have their own nuances and qualifying criteria, but essentially, these are vouchers for families that are either in the shelter system or at risk of entering the shelter system due to a recent recent or pending eviction. So one of the things, it's important that you keep these in mind, just because an eviction process might not necessarily be the worst thing in the world, because it might actually connect you to these. And furthermore, the same way that unemployment was expanded to provide, to cover individuals that are not traditionally covered, we're hoping that is a response to this situation with COVID-19 and that has affected people's ability to pay rent, that some of these vouchers are expanded to provide some sort of relief to families as well. So it's, again, something to keep in mind. And just a reminder of the services that we offer at NHS of Queens. Some of them you've already spoken at the earlier in this presentation. Some of these are to follow. If you have any further questions or concerns regarding any of this, you can reach out to me at the general number for NHS. I'm extension 04. My email, jsantos@nhsofqueens.org. And again, I do apologize. I haven't seen any of the comments, but I know that was really fast. But I just wanted to get as much information out there as possible. Alex, do you think we have time for questions, or it's best that we move on to the next? Because I know I probably went over by like a few minutes.
Yeah, we have quite a couple minutes for a couple questions. I know I saw one right now that just came in that said, why is it so hard to get chosen for affordable housing?
I'm sorry, give me 1 second, because I have to just put my volume up over here. Let me just escape here.
Yeah, and now I am going to share, thank you, Joel, for the information and for going over the various affordable housing opportunities that there are in New York City and who can qualify. And before answering the questions, I'm also going to share some of the links that were not only for Housing Connect. Housing Connect also provide the opportunity for rental, but also for home ownership. Even though there are very, very few opportunities for home ownership and to be able to buy, but then whenever the best thing is to log in and create an account through Housing Connect, and when those opportunities come, you will be able to apply, as well as if those also, I'm going to share information for both renters and also for home ownership opportunity with the HDC apartments. And then also with the Home Path, those are, the Home Path is a program through Fannie Mae that provide opportunities for first-time home buyers. They call it the first look. So in that way, also there's also an opportunity for affordable to be able to buy those properties. So then there's definitely various opportunities to apply if need be.
Right, and I believe they're incorporating that into the new Housing Connect 2.0.
Yeah,
so again, it's still very...
Thank you for the link, Jocelyn. There was one question, Joe, before you go. If someone was ill or had a major health situation, would they still be able to qualify? With an illness. That was one of the questions, without exposing what.
So for the particular, and I'm guessing if they're qualifying for any of the rental assistance vouchers, I'm guessing what the question is here. And again, these particular vouchers, currently, an illness wouldn't necessarily qualify them. However, there are still opportunities like the one-shot deal where they may qualify for it, they apply, or there may be other resources that through HRA that they can apply for rental assistance. And while they might be able to approve now, and some of the ones that I mentioned, they might not be eligible for those, but there may be substitute subsidies and assistance offerings that may arise due to this situation.
Right. The question was really if someone had a stroke or if they had come across COVID, or I just wanted to be specific, you know what I mean? Because the question was basically about a stroke. Right, so I know that some health programs are involved, but.
Right. I mean, right now, again, since the situation, we have been going through it for about 3 months. But in terms of program structure and kind of like responses to the situation, it's relatively new. So again, a lot of these things, until we fully reopen, we don't necessarily know what the criteria are going to be for any of the assistance programs. But again, HRA would be the best thing if they can start applying through now. There may be things that or things that might have been implemented that I don't necessarily that we necessarily haven't gotten wind of just yet. So again, it's for these particular ones. They might not qualify as they are right now, but they may be modifying those definitions to include a larger range of people who have been affected.
And if, Joel, if someone has been affected by, they lost their job and they can't pay their rent, and what resources there may be for them now, where they can go? Can they go to HRA or what can they do?
Right. So right now they can go to HRA and they can apply for, I believe now their one-shot deal to cover rental arrears is online. And while in some cases, while you may not qualify for a one-shot deal, they're currently trying to get as much applications in to see what other assistance programs they can provide. Now, the reason why to set realistic expectation, a lot of funding lines aren't necessarily issuing funds at the moment is because there are a lot of things that aren't haven't necessarily, they can't necessarily be answered at this time. So for example, you don't necessarily know how much rent you're gonna owe at the end of this because there are certain sectors of the employment, there's certain employment sectors that haven't even opened up yet. And there's always the possibility of rolling back a phase or two if infection rates go high. So again, right now, you can apply for a number of things, but there's some of the answers that are still pending.
So they can, if they want, they can call 311, and that would be the best way.
Yeah, they can reach out to HRA. I believe they've made again, due to a mandate, not necessarily in response of COVID, but that they had a deadline that they had before. All of their services are now online, and then you can always call 311 if you're not sure about the information or you don't necessarily have access to the HRA website. That should be your first stop for any rental assistance or any questions regarding funds for paying, whether it be for food, for rent, or anything in general.
Right. Okay. Do we have any of the special remarks that we want to put in before we put on Riza?
No. So there was Councilmember Drum was supposed to be earlier, but something came up, so he wasn't.
Okay. You're muted, Yoselin.
Yeah, so we can go to the next presentation. Well, thank you, Joel.
Thank you so much, Joel.
No problem, guys.
Thank you so much. Great information, Joel. Really great information.
So I think you can take back ownership of the.
If there's any questions that were not answered, then we will do our best to answer. And is that correct?
Yes. If there's anything, you can reach out to me, or a lot of these questions we'll have access to them, so we may answer them offline later on.
Okay, great.
Thank you.
No problem, guys.
All right, great. So we're going to go into what happens next. We're going to introduce our esteemed colleague, Ms. Riza Martinez. She is going to be speaking about homeowners and what to look for during this process and this new normal that we have. Welcome, Riza. Can you hear us?
Yes. Can you hear me?
Yes, we can.
Okay. Good afternoon, everyone. My name is Riza Martinez, and I am the Mortgage Default Counselor at NHS of Queens. And I'd like to thank you for participating at our event. And I hope that all information has been very helpful so far. And right now, I'm going to discuss about homeowner services and what happens since you are a homeowner and if you're having issues due to this COVID situation and have not been able to pay your mortgage and your lender has provided you with a forbearance. Well, basically, NHS of Queens is a not-for-profit organization where we educate you in the home buying process, and we assist you in, providing information for all homeowners in Queens And our mission is to revitalize and preserve underserved neighborhoods in Queens and give you opportunities through homeownership education, financial assistance, and community leadership. We work in partnership with the government and businesses throughout the city. Basically, why would you work with an organization like NHS? The council will discuss your situation and see what programs you may qualify for. We would help you understand the loss mitigation options that services can provide you and the different options that are available to you. We will discuss the types of documents that you would need and also help you put together a budget. If you live in New York, we can assist you in trying to find the best counseling agency in the city. And that way you can contact us through our website at nhsofqueens.org or by calling the 1-800-855-HOME number, where you can be referred to a counselor or an attorney in your area. Basically, there are two, currently due to the COVID situation, there are two mortgage relief options or protections for homeowners. And the first one would be that for those mortgages that are under the CARES Act that are protected, either FHA, VA, or Fannie or Freddie Mac funded mortgage, you are protected. The protection began March 18th and is extended through August 31st, which means that they cannot foreclose against you and they cannot put a judgment or try to sell your home until after August 31st. The second relief option is that you can request a forbearance. A forbearance is a suspension of payments for up to, beginning at 90 days or up to 180 days. And if you're still in the situation of affected by COVID, either you lost your job, you lost the income, or you're still not working and you don't know when you're going back, once the first forbearance period is ending, before it ends, you need to contact your lender again and explain to them that you're still affected by COVID, and they can give you another additional extension of up to another 180 days. And you can be in a forbearance for up to 360 days. What is a forbearance? A forbearance is when your mortgage servicer or lender allows you to pause or suspend or reduce your mortgage payments for a period of time while you regain your financial footage. So in the case of the COVID situation, a lot of people have lost their job or lost income or are temporarily not working, but hopefully will be going back soon. They're able to suspend the payments. This does not mean that this is a forgiven or that the payments are not due. The payments will be due at some point, and you are required to repay any missed payments or reduced payments in the future. But in most cases, it will be paid over time, or special arrangements can be made. At the end of the forbearance, the servicer will contact you about what's going to happen next and when these payments will become available and what programs you may qualify for. So it's very important that if you are currently in a forbearance agreement, that you contact your lender. First of all, if you want to be in a forbearance agreement, the first thing you need to do is you need to contact your lender and explain that you were affected by COVID and that you would like to know your options and if you even qualify for the forbearance. And then if you are in a forbearance and you still need the assistance, then you will you can ask for an extension, and which would be between either another 90 to 180 days. But it's very, very important that you keep communications open with your lender. What happens after? What are the other options after the national forbearance period? Some of the options that some of the mortgage servicers might offer you is one, apply for a modification of your home loan. Number two, develop a payment plan. Or three, a short sale of the home. That's like the last resort. So, like I said, there are different options. Everybody's situation is different. The most important thing is being in communication with your lender, letting them know how you were affected and what is next. And the most important thing is creating that budget. We would have to work together to put together the budget and explain to your lender what your current situation is. So it's very important that your next step should be contacting us and scheduling an appointment so I can do an analysis for you, and I can sit down and discuss what your options are, and also find out, depending on who your lender is, what programs they have to offer. And that way, we can work together and tackle this situation. But the way that you can book an appointment is by either calling us at 718-457-1017, extension 05 or extension 08, or booking your appointment for mortgage default through our website at www.nhsofqueens.org. Now I'm going to discuss a little bit about our rehab services for homeowners. For those homeowners that need repairs on their property, NHS has some grants available depending on your income and your household size. The first one is the Restore program. The Restore program assists low and moderate income senior homeowners who are 60 or over, who own a 1 to 4 family home, co-op or condo in Queens. Very important. For these grants, you have to live in Queens. Like I said, the homeowner eligibility, you must be 60 or older and be on the deed of the property. And for the multi-unit properties, the repairs can be like a boiler, certain things of that nature, but the maximum amount per unit is $10,000 of repairs. And you have to live in the property for a certain number of years in order for it to be considered that you qualify, and also that you don't have to pay the grant back. And you must be the property owner for at least 2 years. And like I said, the property, you must be living in Queens. The Restore program, you can get, like I said before, $10,000 per unit, depending on the household size and income requirements. In the next few slides, it will be the different charts, but you must be current on your mortgage payments. You cannot be behind on the mortgage. You also must be current on your property taxes and water bill. Have a current homeowners insurance policy, and you must complete an intake form from NHS of Queens and submit the necessary documents to apply for the grant application. For the Restore program, for a one-person household, the maximum income is $80,410. Two-person household, $91,850. Three-person household, $103,290. Four-person household, $114,730, and so on. So this is one of the programs so far that we have assisted homeowners for. And the eligible emergency repairs would be like hazardous conditions or physical deficiency that could be threatening someone's health or the safety of the elderly resident, or the structure or ability of the unit. So it's very important that you provide pictures and appropriate information regarding the type of repairs, because they are very limited to certain things that can be done. Those repairs that are not emergency or in nature or health related are not eligible for Restore funding. Another program that we have is AHC. AHC is also used for 1 to 4 family home, co-op or condo, and you have to own the property at least for 2 years before applying for these funds. You must be a resident of a property in New York City, but it also must be located in Queens. And you have to meet certain income limit requirements, which I will discuss in the next few slides. But you must be current on your mortgage payments. You must be current on the property taxes and water bill. You must have a current homeowner's insurance, and also complete an intake form for NHS of Queens and submit all the necessary documents. For the AHC grant, like I said, there's income limits depending on household size. For a one-person household, $71,712. Two-person household, $81,984. Three-person household, $92,256. Four-person household, $102,432, and so on. The AHC grant, grant definition for eligible repairs: any conditions that, if not taken care of, may result in the safety or health hazard of the resident in the home. Renovations are not eligible repairs. For example, eligible repairs would be bathroom repairs like mold removal, ceiling and walls with water damage, or plumbing issues, damaged walls or ceiling replacement, handicap accessibility bathroom or kitchen, and entranceways or exits, sidewalk repairs, outdoor ramps for accessibility, sewer emergency replacement of the water main, or those type of repairs are considered emergency, and all these would qualify for the grant. And like I said, it's a grant as long as you qualify based on income and household size, and that you live and remain in the property for a certain period of time, then you don't have to pay the money back. It is considered a forgivable loan, which is a grant at the end, because you suffice all the requirements, so they allow you to not have to pay it back. I want to thank you for participating, and if you have any questions, you can reach out to us at our offices, and we're here to assist you in any way that we can.
All right.
Thank you so much, Riza.
No problem.
Thank you very much. We appreciate that. That was a lot of information to take in.
Yes.
A lot. Thank you so much. Thank you very, very much. So, I mean, listen, we have my whole staff of NHS here, and I'm happy and excited that we're almost at the end of the process, but I think this was a lot of good information that we've taken in today. But we have to talk one more time about, especially with this serious situation going on, we have our next colleague, Mr. David Bagora. He's going to talk about our work development program, and I'm excited to have him on. David, are you ready for us?
Absolutely.
Great, great, great. So David, you can jump right in whenever you're ready, my dear.
Hi, thank you everybody for joining us today. My name is David Burgoa. I'm the outreach specialist for Neighborhood Housing Services of Queens, and I'm in charge of the local hiring program that we run in partnership with the LaGuardia Airport. So this program for employment at the LaGuardia Airport comes as a partnership. We are partnered with two wonderful organizations like the Council for Airport Opportunities and ELMCOR, so that we not only help you get a job at the LaGuardia Airport, but we also help you with career readiness workshops. ELMCOR provides the career readiness workshops. We are here to help you, and the Council for Airport Opportunities will assist you with finding the best possible job for your situation at the LaGuardia Airport. Now, this is a team effort, and we are here to help you navigate this process. Right now, given the circumstances, the jobs are limited because the airport is not fully operational. Flights have gone down for about 80% now. However, there are positions and there are jobs opening up every week. Now, how do you get ahead of the curve and start applying for those jobs? I'm going to share my screen and I'm going to show you how. So this is how you apply for job opportunities at the airport through our local hiring program. You got to send your resume to my email address, which is right there on the screen. And what I'm going to do is I'm going to pass it on to the account managers that are in charge of these partnership with the companies at the airport, and they'll schedule a meeting with you. Of course, it's going to be virtual, and they will assess what are your capabilities, what is the kind of job you're looking for, what are the things you want to do at the airport. They'll tell you, this is what we have available. We believe you're a good match for this position. They'll try to help you apply for the position they think it fits you best, but you also have a say, and you can say, you know, I like that position, but how about this other one? So they're here to help you in the process. Again, it's going to be a back and forward between you and the account manager, but he or she will be there to assist you throughout the whole process. But again, the first step is sending me your resume. That way I can start creating that connection between you and the account manager. And you should be called, I believe, within 3 business days. This is a wonderful opportunity. New jobs will be opening up as we keep moving forward with this whole pandemic. And there will be more positions than before because now the airport is trying to make sure that everything is up to par in terms of sanitation and in terms of assistance to people who may have questions along the way. Because again, a position that never existed has just opened up, which is temperature checker. That is something never existed. That is something that opened up recently, and there are a lot of opportunities like that, and there will be much more. So again, you want to get ahead of the curve, sending me your email as soon as right now. If you sent it, I already have it. But if you have any questions, you can put them in the chat. I will be looking at the chat, or you can email me if it's something a little more private that you would like to discuss. And again, thank you everybody for joining us. It's been a pleasure.
Absolutely. Thank you so much, David. I know Yasin's going to jump in. I just want to make sure if anyone has any questions for me as well, my email address is dharris@nhsofqueens.org. I'm more than happy to respond back and answer your emails. We've answered the majority of my questions, but I want to make sure if there's any questions, please feel free to email me. Yaslin, please take it away. I would like to thank everyone from my team, NHS, Joelle, Alex, Yoselin, David, Josie, Miriam, and Riza I appreciate you guys. And please, Jocelyn, I just thank you, everybody, and all of our sponsors.
I really thank you, Neil. It really takes a village. And we want to thank our neighbors who have participated in today's Housing Expo. This has been an experiment for all of us. It's a new territory, so we want to thank you for trusting and for taking time out of your precious day to be with us. I want to thank our sponsors for believing in us and for allowing us to have this opportunity to invest in the community and also invest in products that are going to be beneficial to our neighbors. So our neighbors will be able to stay and continue to rebuild New York City and continue to rebuild Queens. I want to thank also our tiny but mighty team. Donil, thank you for the leadership, as well as everyone from the office that put their heart and soul to make this event possible. To Joel, to David, to Alex, especially I thank my right and left and my right arm, Alex, for always helping, always behind the scenes, but always around. Raisa, Miriam, Josie, our Tiny, and our board of directors for giving us the opportunity and really taking the organization to new heights. When it comes to housing, and even throughout this pandemic, we have seen how our home is more important than ever. How it's important also how we can, so how do we also continue, even in despite of the pandemic, continue to achieve our dreams? Where do we can go? Where the resources are? It has been our hope that whether it is in terms of that you have learned, and also maybe now you have more questions than ever, but also to reach out to us, reach out to other, whether it's us, also, and if you are out of state, also reach out also to other housing certified organizations. And also if you have families that live in other areas, making sure that they go to a HUD certified housing counseling. Also that you also go to and that you have experts that are more than willing to assist you throughout this process. So it is our hope that you being able to gain tools. Where do you start your application? You want to buy a co-op? What are some of the questions that you have? What type of affordable products are available? Down payment assistance. And it may be that today, like I mentioned, you have more questions than answers, but that is okay, because that's what we want. We want to be able to continue to questioning. You are investing your resources, and also it's important to invest time in learning all the tools. Right now, there may be so many people involved in a transaction. I think it was 13 different experts, but the main person who is at the helm is you. And you to be empowered with all the different tools available. Also, if you also, and also through this also Expo, if we are also a renter, we are in terms of what are some of the opportunities available out there. Also, what are some of the challenging, also in terms of, also if we were affected by COVID, what are in terms of the eviction and moratorium and what that entails. Also, we cannot have, we also want to be able for folks to be able to buy, but we want people to keep their homes. That is most importantly. Why? Because that is how we build our community. That's how we are stabilize our communities. So therefore, through RISA being able to provide resources for homeowners, maybe all of us, we go through our, we are okay today, but we don't know what is going to happen tomorrow. But if that is the case, where can we go and what resources do I have? What do I have for? We have to, what is the forbearance? What is also in terms of if my house is in bad shape, and where do we go? Do I have to live in a home that the roof is falling off or the boiler and I'm in low to moderate income? Well, no, there's resources available. And then also in this expo, we cannot have, and we see it more than ever, that we cannot have a housing without jobs.
That's right.
Without jobs, without housing. So everything go intertwined. And as a community, that's why we also be able to participate in the LaGuardia Career Center with 2 outstanding organizations. When it comes to economic development, we want to make sure that our folks that live in the community be able to obtain the jobs that are available at the LaGuardia redevelopment. So therefore, this is how this LaGuardia Career Center came about. So we thank David also for the presentation. So we as a community cannot be more grateful to all of you that have participated, and we thank you for the time. And once again, we are NHS of Queens, and our information is there, and we're going to continue. And we thank for all the great questions. We have we have all these great questions, and we're going to do our best to continue to answer them. Also to share the slides that were presented, and also to continue our office. That's what we're here for, and that's what we are made of, to make sure that we empower you and also to provide you the resources that you need. So thank you once again, and I can't wait to hear from all of you soon. So thank you.
So before we go, we also, we have an adopt a family program. Remember, we see the need of the community, right, Jocelyn, to feed our local families. So if you go to our website at NHS of Queens, we didn't talk about that. We have an adopt a family program where we're helping our most neediest people in our area to make sure they have food in their homes. A lot of people have been put out of work and unemployed or on furlough, so they need to feed their families. So if you go to our website, you can jump right on the link to choose to adopt a family. We would appreciate that as well.
Yeah, it takes a village. So
absolutely. It does. It does. Joelle, we want to thank you too. I don't know if I said thank you, Joelle. But everybody, thank you so much. Please be safe and please protect yourself and be well. Many blessings.
No problem. Thanks, everybody.
Thank you. Thank you.
Good night.
Good night.
Good night.
Bye.